This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. 2 days in a row for Lisa Mateo's Yes by Popular Demand in 45 minutes. The newspaper segment with Lisa Mateo. Her people finally acquiesced. Said she's ready to do that. Bank of America earnings, Paul, what do you think? I mean, they're not J.P. Morgan.
But I mean,
the bottom line.
The revenue is right in line. EPS beat a little bit here. But I mean, I think capital markets, I was just listening to Allison Williams, giving her analysis. I mean, capital markets strong for pretty much everybody we've seen so far.
They do a great PowerPoint. Everybody does a different PowerPoint. I was so critical of them. I'm thinking, Paul, 10 years ago, one of the banks called me up and I had to meet with their marketing people to tell me why their PowerPoint sucked. And I did that. And to be kind here, Bank of America has a wonderfully clear one, third quarter. Digital update. Paul, this is your kids.
Like
23 million active Zelle users.
Yep.
256 million, 250 million Zelle transactions. And this is a number 2.7 times more than checks written. Lisa, when was the last time you wrote a check?
I can't remember.
I
can't.
I'm trying to think where my checkbook is.
I know, I can't.
I have a pile of checks in the drawer, and I think we write them to one person. I mean, it's amazing.
Remember balancing your checkbook back in the day?
I remember talking to Brian Moynihan in Davos, and he said, Tom, we've been wrong on digital. This is 10 years ago. He said, we've been wrong. People love it, and old people love it the best.
Yeah.
And that's what they're doing. Bank of America out. We'll get some more on that. Goldman Sachs out in 28 minutes-ish, they say. Let's get right to it. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And you got it. Well, we have futures little changes after another record high on Wall Street. Traders looking to today's bank earnings. And like you said, we're already starting to hear from them. Bank of America up more than 1.5% right now. Third quarter net interest, FTE, fully taxable equivalent, income met estimates. Awaiting results from Goldman Sachs, Citigroup. Tomorrow, it's on to Morgan Stanley. All right, so let's get to futures. So NASDAQ futures down about a point right now at 20,617. We have Dow futures down 12 points. 43,351. S&P futures up about a point at 5,910. Bond market back in business after being closed for the holiday yesterday. 2-year yield 3.95%. That's little change. The yield on the 10-year 4.08%, and that is down about 2 basis points. To commodities, oil dropped after fears of major supply disruptions starting to ease. Right now we have Brent crude down more than 4%, $73 a barrel. WTI crude $70 a barrel. More earnings coming in. Johnson & Johnson up more than 1.5%. Stronger than expected third quarter earnings. That was thanks to surging sales of its cancer medicine, Darzalex. It also lowered, though, its full year guidance. Then you have United Health. They're down more than 3%. It lowered its top end of its forecast due to higher medical costs. That's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. I have been to the Economic Club of Chicago. It's in this building that's ginormously high, like you can see North Dakota.
Right.
And Diane Swank took me there once, I think. And the lunch was actually good. It was edible. And it's like there, and the worthies are all of the Midwest are stacked around. Yep. And today it's with John Micklethwait of Bloomberg and a guy named Donald Trump.
Yep.
And we're looking for that at 12 noon.
Right. And our coverage will begin at 11:30 on a special edition of Bloomberg's Balance of Power. Listen on Bloomberg Radio, watch on Bloomberg Television, or on the Bloomberg Podcast YouTube channel, Tom, so everywhere.
One of the great shocks, and he's far too young as a retirement, he's exit stage left. Ian Shepherdson out of Pantheon, he joins us now. Pantheon Macroeconomics, Sam Toombs is going to take over. And Ian, I was dazzled because you're finished and all that. I'm like, he's nowhere near retirement. And then I see Eddie Howe of Newcastle is being considered for coach of the national team. Are you going to take over for Eddie Howe at Newcastle?
I'll be sticking in an application because, what have I got to lose? The most I can say is no.
I mean, they need
Which they will.
At the national level. Seriously, they need Eddie Howe, don't they? They need some energy there.
They certainly don't need the current interim coach. No, definitely not. But I really hope they don't take Eddie. I'd be very upset.
Let's start with what you invented, which is great China coverage, linking it into global economics and Pantheon macroeconomics. Can China get it going, get out near 5% GDP to help America and the rest of the world?
Well, they needed to help themselves, that's for sure. There's more stimulus coming, for sure, and hopefully more effective stimulus. They need to get the money into the state and local governments to push out that public investment, but they also need at the same time to provide some repair funds to those state and local government balance sheets. So it's kind of it's a twofer really. That it's all very well to allow the state and locals to raise more money, but you've got to make sure that they actually put it to work, doing useful stuff rather than shoring up their rather fragile balance sheets. So this process is not over, for sure. It's got a long way to go, but I'm beginning to be a little bit more hopeful that maybe they're moving onto the right track and start with dealing with the fiscal issues and the debt issues and the banking issues. But these are so big. This is not something that can be fixed overnight. And if you don't have an immediate crisis, the motivation to fix it more aggressively isn't there. And they don't have an immediate crisis, but they do have some big problems. They got core CPI inflation heading close to zero. They've got PPI deflation, which is persistent and deepening. They've got slow growth. They've got bad demographics. There's a lot wrong, but at least policymakers now maybe starting to recognize that they need to do more.
Ian, I guess one of the questions I hear from a lot of folks that look at China on a regular basis is, what can the government do? Are the problems just too big? Like you mentioned, the demographics and so on. Is there something they can really do to move this needle here? How is the consumer in China?
Yeah, I mean, they can't fix the demographics overnight. This is the legacy of the one-child policy, which persisted for decades. A huge mistake. But what they can do, or what they could do, in theory, is use the power of the central government to provide a lot more support to the banking system and to state and local government, and to take a lot of those debts onto the central government's balance sheet and free up the space to deal with the problems out in the rest of the country. But this is being done very piecemeal and very slowly. I guess, there's a huge moral hazard problem, isn't it? If you bail out people who've made a mess of things, then obviously there's, you're potentially incentivizing to go and do the same thing all over again. You heard the same arguments in the US in 2008. Bail out the banks, they'll just go crazy again. Well, actually, sometimes you just have to bail out the banks.
Ian Shepherdson, Max Kettner of HSBC was on with the economist Anne-Marie Horton, and they were talking up nominal GDP and the surprise of buoyant GDP. Is that our misjudgment for the next 13, 14, 15 months, and that top line GDP does better than anyone's expecting?
Well, it might initially. I mean, it's kind of interesting. If you look at the history of the US cyclical downturns, what you'll find is that the GDP numbers tend to print high and then get revised down.
Yeah.
And actually, in real time, if you want to know what's going on in the economy today, I hate to say this, but payrolls is probably a better guide. I don't mean, an individual month payroll numbers, because they're hopeless, but the trend in payrolls tends to be revised less than the GDP numbers. And certainly if you look back at the recessions, we're going back a long way now, but the last regular business cycle downturn in the US is 2001. But if you look at that recession and you look at 1990, which is a previous one, then what you see is that payrolls got it right. And the GDP numbers kind of persuaded everyone that everything was fine. And we'll just carry on, there's no big problem. And then the next thing you know, payrolls go to zero and suddenly everyone says, look at that. So I'm just a bit wary about putting too much reliance on those GDP numbers. I'm really quite suspicious of them in real time.
Ian, what do you think this Federal Reserve should do going forward? They started off pretty boldly with a 50 basis point cut. A lot of folks say they can be a little bit more cautious going forward. How do you think the Fed should move going forward?
Oh, I think they should go quickly.
Okay.
The rates are way above neutral. Monetary policy lags are extremely long. And this obsession that the markets have, and sadly some people at the Fed have, with the latest data just drives me nuts. Whatever you do to policy now makes no difference to the economy for at least a year. And the data are not telling you anything about the current stance of policy. They're telling you about the stance of policy 12 to 18 months ago. And since then, it's become significantly tighter. So I want them to get moving now, because whatever they do will take a long time to work through. And I think we've got some sluggishness in the labor market pretty much baked in. At the same time, we've got inflation heading nicely down to the target, which I think probably will be hit sometime middle of next year. And we've got rates that are, by anybody's measure, they're way above neutral. So this kind of tendency in markets to overreact to the short-run data is a really big problem. But unfortunately, the Fed does it as well.
Ian Shepherdson, congratulations on what you built at Pantheon, the way you put it out on LinkedIn, the way you pulled in Asia coverage as well. Ian Shepherdson building Pantheon Macroeconomics, and we wish him the best coaching Newcastle here in the coming weeks. He is with Pantheon Macroeconomics. Red and green on the screen, the VIX under 20, 19.70. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Both Donald Trump and Kamala Harris rallied for voters in the Keystone State last night. The vice president speaking in Erie, Pennsylvania, calling the former president unstable after playing video of his recent statements.
He's talking about the enemy within our country, Pennsylvania. He's talking about that he considers anyone who doesn't support him or who will not bend to his will an enemy of our country.
Trump's running mate, J.D. Vance.
The enemy within are people that Kamala Harris let into this country unvetted, unchecked, and undocumented.
Trump, campaigning in Oaks, Pennsylvania, had to cut his town hall short after it was interrupted by 2 medical emergencies. Israeli Prime Minister Benjamin Netanyahu has told the U.S. he will strike Iranian military sites. Bloomberg's Ed Baxter has the story.
The way Netanyahu puts it is that he is willing to strike military rather than oil or nuclear targets. The Biden administration has been very open about the fact that it did not want the strikes on oil or nuclear. The Washington Post reports on the Netanyahu-Biden call earlier this week, the prime minister had said he was going to strike infrastructure, so there was fear it could be what the U.S. did not want. After that call, the president also announced the sending of the THAAD system to Israel. Ed Baxter, Bloomberg Radio.
In baseball, the Yankees take game 1 of the ALCS, beating the Guardians 5-2. The Mets even up their NLCS against the Dodgers in game 2, beating them 7-3. Global news, 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Mike LaBar. This is Bloomberg. Tom, Paul, Lisa.
Okay, let's get right to it. Would everybody lighten up? We have a mayor who's beleaguered. I think we can all say that without editorializing. Mayor Adams shows up for the Columbus Day Parade. Folks at New York, it's huge. What, 30,000 people, Michael Barr, something?
Yeah.
You know, it's a big deal. And he's got a hat like in 2000 that says Yankees and Mets on the hat. That's cool. To me, it's like fun.
They wore that back, like you said, when we had the original Subway Series back then.
He's a politician, you know, appealing to both.
I mean, what is he supposed to do?
Well, exactly. I mean, with everybody, I mean, you know, granted, there's a whole story here with New York City and alleged issues. Okay, he wore a hat to have fun. That's what you do. I mean, de Blasio was a Red Sox fan.
Yeah, I remember that.
The mayor before him was an Orioles fan. I don't know what to do. I don't know what to do about this.
I have no comment on that one.
It's too complicated. Anyways, I say congratulations, Mayor Adams. Tony, can we really get Paul Sweeney, Yankees, Mets?
3 games away for each of them.
Yeah, and the Mets come home now.
Oh, they do? That's right. Yeah.
So they go.
LA. All right,
very cool. We'll have to see. A little red on the screen. Futures -2 at 12 noon. Donald Trump with our John Micklethwait. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by CME Group, the world's leading derivatives marketplace offering the widest range of global benchmark products across all major asset classes. CME Group, where risk meets opportunity. All right, little movement in futures this morning after the S&P 500 hit its 46th record high of the year. Right now, we'll check in with them. S&P futures, a little change, down about a point at 5,907. Dow futures down about 23 points, 43,340. NASDAQ futures down 13 points at about 20,605. To the two-year yield, 3.95%. That's little change. The yield on the 10-year, 3.07%, and that's down about 4 basis points. To currencies, we have the dollar weaker, Japanese yen stronger at 149.22 against the dollar. We have the euro weaker, British pound stronger. Bitcoin at this time yesterday was up about 3%, now down about 0.7% at around 65,000. To earnings we go. I want to check back in with Bank of America shares after their third quarter net interest income beat estimates. Their shares right now up about 1%. Sticking with the financial sector, State Street announced its CFO will step aside in February, accepting a new opportunity outside of banking. State Street also reported revenue for the third quarter that beat estimates. And Walgreens up 4%. Profit guidance for 2025 met estimates. It also announced plans to close about 1,200 stores nationwide over the next 3 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Good morning out on YouTube. Subscribe to Bloomberg Podcasts out on YouTube, growing every day. Tell your friends, Romans, countrymen, about it as you can. On radio, your commute across the nation and around the world on Apple CarPlay. Android Auto, bigger than I thought, Paul.
Yeah.
I got notes from people. Compare and contrast. Android
One of my
Auto
offspring is an Android person, and he swears by it, and he thinks he's the smartest person in the room. So
they have an ecosystem.
They do.
And good morning on Sirius, and of course the quarter 99.1 FM in Washington. I know you'll be tuned in 12 noon today. Donald Trump with our John Mickleswaite today. We've ignored foreign exchange. Audrey Child Friedman's people called up and said, total tantrum.
That's right.
It's a nice tantrum. It's like a elegant French tantrum.
Yep.
But they called up and said, more FX. Currency. So we're going to do FX now with Audrey Child Friedman. Audrey, is the weakening of the yen for real? And as Jordan Rochester at Mizuho suggests, a yen weakening to 150, or dare I say 155, does that signal trouble for the government of Japan?
Well, I think that it signals that the rate hike narrative for the Bank of Japan comes back soon, and potentially as early as October. Because remember what's taking us higher on dollar yen is the combination, as you know, of the better news flow that we've had out of the U.S. economy, but also the kind of slight shift from the Prime Minister of Japan a couple of weeks ago about, setting the right conditions for further rate hike. That's kind of pushed away the rate hike narrative for Japan. But I think, that narrative hasn't gone. And the weaker the yen into the BOJ meeting in October, end of the month, and the more likely that at least you get back into talking about higher rates, and that will contain how much more, upside you see in dollar yen. So, would I chase it much higher from here? Probably not.
So, Audrey, where do you see the best value out there in the currency markets these days?
Well, the time horizon is key, but I think, if you think about the next few weeks, we've got so much uncertainty to deal with, and, such changes in the narrative that we've seen in the past few weeks on the economic front for the US, for the Eurozone. And of course, now we have the US elections, a great degree of uncertainty as to what's going to happen there. And by the way, the latest opinion polls tend to suggest that Trump is catching up, and I think that's bullish for the dollar near term. And that's one of the reasons, I think, why the dollar has been doing better. So to answer your question is, I would expect the dollar to continue to do well into the election. And then we sit down and have a reset and rethink as to where we move from here.
So how do currency traders position themselves for this election? Because presumably Boy, you could have two very different economic outlooks depending upon how not just how the White House goes, but also how Congress goes. Do FX traders try to hedge going into that?
I think, you have to be very humble into this election. It's very difficult to have a strong conviction, and you can see it in the option market. Even if you look at dollar yen in particular on options, there's no strong conviction as to where we go in the next 3 months. So what I would expect to happen, and certainly that's the way I would be trading it, is, we've seen big move in the currency market in the past 3 to 6 months. Right. Some people have done really well. Probably try to get into the election as light as possible in terms of positioning, and then reset after that and see what happens next as well in terms of macro news flow that will drive the market eventually.
Audrey, Joe Moek was on from AXA, and he was pretty darn gloomy on GDP and the oomph of Europe. Do you just model in some kind of vector of weaker euro simply because they're not getting it done with economic growth?
I think you have to, because you see, at the beginning of the year, and that was validated in the past few months, we were all kind of, the Euro bull camps was anyway expecting the combination of weakening in the US economy. You have to be careful how you describe that, but weakening in the US economy, and at the same time, the euro economy finally picking up. And what happened in the past 2 or 3 weeks is that the whole data and the whole news flow out of the US is strongly questioning this weakening in the US economy. In fact, we're seeing a revival in the news flow out of the US, and that's questioning, how much we should expect in terms of Fed rate cuts. And at the same time as that, we're seeing no hint of good news from Europe, and that's the problem. And that's where, if you're Euro bull, you're kind of going around circles for the time being and relying too much on the US economy to weaken, and that's what happens. It doesn't happen.
Take the Nobel Prize Awards yesterday, Audrey Child-Friedman, the overlay of technology on nations. There's got to be a foreign exchange bet off that. Is the foreign exchange bet American exceptionalism?
Well, it sounds like that's the case for the time being. I mean, certainly, the structural element here is strongly, compellingly supportive for the US. I don't think this is a driver for the currency market if you look at it, on a 3 to 6 month basis. But certainly, it's adding on to the long list of reasons why the US dollar is doing better in the past few weeks and may continue to do so, until, as I say, until the elections.
Audrey, thank you so much. Too short a visit. Audrey Child-Friedman with us there on foreign exchange. Paul, I'm going to be off for a couple days. I am moving to Rome.
I know. I see. I'm looking at the euro here. 1.09, Tom. I don't know.
And, we're going to touch Cafe Greco around since 1760.
Nice.
Goethe, Byron, Keats, Matteo, they all visited
I know.
Cafe Greco. But the gauntlet's there. You know the gauntlet in Italy? It's like, remember Indian camp and you did the gauntlet? It's called Via Condotti.
Okay. Hit it.
And it has all these stores that you try to make it down the gauntlet.
I see what you're saying. Okay.
And keep the checkbook and they keep the visa in order. And it's there and it's booming. I saw some videos, Lisa Matteo, of Rome in October. It looks like Rome now in August. They've essentially pulled the summer forward. It's packed. I mean, absolutely packed.
Well, you're going to have a good time then.
No, I don't think so. You can't walk down the street.
Oh, you'll be fine. You'll be fine.
We're taking a motel.
The crowds will part for Tom. I mean, Europe was, Ireland was pretty busy, like in Dublin and Belfast as well.
And that's just part of this odd economy where you got a boom American economy and other people, and we'll hear this from Mr. Trump today with John Micklethwaite at 12 noon. Look for that coverage at 11:30. But, the divide in America is there, and
it is.
Part of people are out. We got Goldman Sachs out. We're going to do that. We're going to give you the earnings in 28 seconds. How about that, people? I mean, we're gifted on that as well. Paul, help me with Goldman Sachs.
So Goldman Sachs net revenue $12.7 billion. Estimate was for $11.77 billion.
So it's
the
a
revenue
big
came in, big. Well, fixed sales and trading right in line.
523. Now trading at 530, up nicely. We'll have more on Goldman Sachs earnings, Bank of America as well. From New York City, nationwide, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still little change with earnings set to drive U.S. sentiment this week. Bank earnings, a big part of it. We heard from Bank of America, shares up more than 1.5%. A beat for Goldman Sachs, up 2%. Third quarter net revenue topped estimates. We'll have more on that in just a bit. Citigroup reports about a half hour from now. So right now we have NASDAQ futures down 17 points at 20,601. Dow futures up 16 points, 43,379. S&P futures down a point at 5,907. We had the 2-year yield 3.95%. That's little change. The yield on the 10-year 4.07%, and that's down 2 basis points. That is a Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciated. She's up and down and up the surveillance escalator. Allison back with us as she was with Nathan Hager here earlier on Bank of America. I just want to, are we slotting in Solomon as executive of the year on Wall Street banking? He was a piñata 18 months ago. I mean, he's unloading the charge card to whoever, Barclays, a GM charge card. I'm looking at these earnings, the stock putting on the bid right now. I mean, is he your bank executive of the year?
They are doing what they do best, and I think that all the moves last year, were the smart thing to do. They had made these investments years ago. They said, let's try to tap this one segment of the market we've never been big in, and it wasn't working, and they closed up shop.
Max Abelson's out. Ratio guy. He named his dog Ratio. Can you believe that? Anyways, Max is out with his dog Ratio, and you got J.P. Morgan's ratios, Allison, and you got Bank of America's ratios. They're not that good. Where's Goldman Sachs fit in the continuum from J.P. Morgan to Bank of America in terms of compare and contrast?
Well, J.P. Morgan still has the leading returns on tangible equity. And I think, again, Goldman Sachs, I think they're doing what they do well. But there still is a lot of volatility to the trading business, right? So this quarter is a great quarter. They have been gaining share in the equities trading business. They're a leader. M&A is a business that they've, led on a revenue basis for years and years and years, doing well in that business as well. But I think the one shift to their business is within the alternatives. So Paul, you'll know they've always had this amazing merchant banking business. After Volcker, they had to sort of pare back some of the balance sheet investments that they made. And now they're using that expertise to make those same investments for clients. But guess what? Now they earn fee revenue on clients' money, and Wall Street investors like that a lot more than using your own capital.
So, I mean, this is the Goldman Sachs I think most investors have signed up for, Allison, which
Correct.
is they identified a lot of really big core businesses, whether it's fixed income equities, the investment bank, the private bank. Is that it? Just deploy capital where you think you can get the best returns for shareholders?
I mean, that is what they do, and I think where they've always tried to focus investors is look, we know we have a lot of different volatile businesses, but focus on the growth of our book value over time. And if you think about the way that investors value these stocks, right, it's what is the, think about price to book in terms of what are the returns I'm getting on that book. The volatility in trading will take a little bit away from that, but that's why they're building sort of this alternative fee business, which helps.
Allison, thanks so much.
Thank
we'll
you,
look for the publication here. We'll see that with publication Bloomberg Intelligence here coming up. This is a joy. Charlie Clough, I think I first knew him at Colonial Management. This is ancient history.
Way back, yeah.
This is like
Boston.
John Hancock's house. It's
Boston.
just been torn down up on Tremont Street or wherever, up on the hill. Charlie Clough is definitive in Boston, definitive with Merrill Lynch, and definitive within all the equity business. We're honored that Chuck Clough would join us right now to get an update. Chuck, you've seen bull markets before. What's the character of this bull market?
Well, I think there are three factors playing roles here. Most important is inflation. The CPI inflation has declined from 9.1% back in 2022 to 2.4% today. And the personal consumption deflator, which is, we all know what the Fed looks at, that's running about 40 basis points below that, around 2%. So that's well within their target. There's a productivity boom going on. If you look at total weekly hours, they've been declining for the past 2 years, but the economy has grown, and that's productivity makes up the difference. And productivity means better profits. So our sense is that you've got a profit engine at the same time that inflation's been going in the right direction. And there is one third thing going on that a lot of people haven't picked up on. The private economy is generating cash, and that's unusual this late in a business cycle. Households are saving. I suspect it's baby boomers saving for retirement and making sure they can fund longer lifespans. But businesses are paying down debt. You can't go on a conference call where management isn't trying to pay down debt here, and that's creating somewhat of a liquidity surplus. So businesses are earning more than they're investing, and households are earning more than they're investing as well. That means we've got a savings glut, and that's probably will likely push interest rates down.
Chuck, how do you feel about valuation here? We're getting into the thick of the earnings season here. How do you think about valuation in this market? We've had a nice move higher in the S&P 500 this year.
It's hard to time markets on the basis of valuation. I think with businesses generating free cash flow at the rate they are, I think valuation becomes less of a factor.
Okay. If
the private economy is throwing off excess cash, that's going to find its way into the capital market somehow.
Chuck, we've had a market for the longest time, many, many years, that's been led by technology. And now I guess the latest iteration of that, Chuck, is the AI. What sectors do you look to continue to move this market higher?
Well, AI is important. And quite frankly, I don't think the fangs are over. When you look at the cash flow that they generate, and the growth that they have, it's not out of line at all. I mean, Google actually trades at below market multiple. So I sense that I think you want to stay there. But there are other things going on as well. Aerospace defense is an industry that's is coming on. Boeing's, of course, is wounded, but that makes Airbus all that more important. And thirdly, I think there's one area I would look at, and it crosses industries, but if we're right and the economy is generating cash, a lot of businesses were forced to take on a lot of debt when COVID basically closed everything down. As businesses generate cash and pay down that debt, that helps equities as well. So I think anybody who's deleveraging their balance sheet, the cruise lines stand out in that sense. There's an opportunity there as well.
Chuck Clough, I'd like to talk to people of a certain vintage. I think of Ed Hyman, Ed Yardeni, of course, Ed, incredibly bullish. Let us go back, Chuck Clough, to the Nifty 50, the Joseph Schlitz Brewing Company. Let's see, what else? Black & Decker, Eastman Kodak, Hublot, Xerox, Xerox, names from another time and place. Chuck Clough on the Nifty 7. What's going to become of them? Are they the next Joseph Schlitz Brewing Company?
Well, I think what happened, two things happened to the Nifty 50. One was, of course, that they were very, very high multiples, up in the 50s sometimes, certainly 35 to 50 times earnings. But secondly, they stopped growing. And I think that was the engine that came into part. The same thing with the dot-com boom. That was basically supported by a debt boom, tremendous overinvestment. And of course, as earnings collapsed, so did the values there. I think the AI situation is quite different. These are companies with tremendous platforms. When you look at companies like Microsoft, for example, the only company that survived the dot-com boom and continued to dominate was Microsoft. Of course, Google and Amazon came on in the aughts, but they made all of the transitions necessary as technology changes. They captured the cloud. They captured AI. That's a dramatic difference between these earlier cycles. So I still think they're alive.
Chuck, within the productivity boom you mentioned, do you ascribe to Ed Yardeni's Roaring 20s? Can you take a vector and run it out 1 year, 2 years, 3 years, 5 years, and come up with big SPX and big Dow Jones industrial average numbers?
I think you can, and the reason I say that is there are three factors that. Let's look at the events that created 40 years of declining interest rates and declining inflation, and of course that was interrupted by COVID and the tremendous government response to that. But those three factors were: one, demographics. As people age, they get older. We've seen that in Japan for 30 years, and we started seeing that in Europe in the early teens, and now we're seeing it in the United States, where we are seeing the baby boomers retire. And once you retire, you stop spending. You don't buy houses. You don't buy cars. So that's one of the reasons why we think we're beginning to see a net savings balance in the household sector. And of course, that'll only pick up as the baby boomers really do retire. Right. The second thing, of course, is where balance sheets are. Private debt is still 150% of GDP, and that means as interest rates do go up, it slows down spending. We're seeing that in credit cards. And then thirdly, there's technology, which of course is booming today. It's the one investment cycle we have. You put those three things together, they only become more intense as we go through the rest of the decade. So I wouldn't give up on financial assets yet.
For those of you younger listening on your commute across this nation, around the world, good evening in the Pacific Rim, and on YouTube, the cadence you're hearing from one Charles Clough is like the old days, Paul. It wasn't rushed and frantic. No. It was just, here's the three reasons we believe.
Take your time.
There's a cadence, a pace here we treasure.
Chuck, what is the risk to this market here? I mean, I step back and I look at the S&P 500 up 20% year to date. And that was kind of in a blink of an eye. Is the risk here maybe the Federal Reserve makes a misstep? What concerns you out there?
I would say, well, of course, on the geopolitical front, there's more moving targets than you can really assess. But I would say that would be the most important factor. The Fed over tightening in a period. I think the risk for that is lower than it was in the past. Remember, the Fed still has a $7 trillion balance sheet. And it looks like they're likely to stop there, and that gives them an awful lot of resources to handle any kind of liquidity event that might occur. And the second is our financial sector is heavily overcapitalized. So it's an environment we've never really looked at before. The financial sector is overcapitalized at the same time that the household and corporate sectors are saving. That creates a liquidity. I would say the biggest risk that investors might look at over the years ahead is yield shortage will be back. Look at how triple Bs are nearing the treasury rate. It's going to be harder and harder to find yield. And eventually that will hit the short end of the curve as well.
Charlie Clough, thank you so much. Channeling Sir John Templeton there at the end. Templeton once said to me, Tom, there will be a shortage of bonds. Charles Clough, legendary, of course, great to have him on, always associated with Merrill Lynch.
Yep,
Eric Brynjolfsson off the Nobel Prize announcement yesterday of his colleague in crime, Simon Johnson. Thank you, Simon Johnson, for attending yesterday. Americans are significantly richer now than they were back in 2019 after counting for inflation and also losing money on Detroit Lions football. He's got a great bar chart here showing the American difference. Germany, Paul, flat on its back.
I know, yeah, tough. I mean, that big export economy dependent upon China, and then they've also had, to deal with the energy issue, no longer getting access to Russian energy.
Bloomberg's About Conversation. We did that yesterday. Our Stephanie Flanders in conversation with the Prime Minister of the United Kingdom at 12 noon today. Donald Trump in conversation with John Micklethwaite, the Economic Club of New York. And, of course, coverage at 11:30. Who's doing the coverage? Are you just sliding right into
Joe
that?
Matthew might be just kind of...
Joe Matthew sliding into it?
I think so. I think that's the game plan.
Well, we'll have to see. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, still wavering after the S&P 500 notched another record yesterday. Let's check in with the NASDAQ futures. Down about 15 points, though, at 20,604. Dow futures up about 20 points at 43,383. S&P futures down about a point at 5,907. The two-year yield, 3.96%. That's little change. The yield on the 10-year, 4.08%, and that's down 2 basis points. We've been telling you about bank earnings, so I want to check quickly back in with them. Bank of America up 2%, Goldman Sachs up more than 3%. Citigroup, we'll hear from them in about 10 minutes from now. Aside from bank earnings, a few companies making news. It's Boeing. Plans to raise as much as $25 billion to try and boost liquidity, also withstand a prolonged strike that's affected production for about a month right now. We have shares up nearly 1%. And shares of NVIDIA, Advanced Micro Devices, Intel lower. This is after Bloomberg reported Biden administration officials considering capping sales of advanced AI chips to some countries. NVIDIA down 0.5%, AMD down 1%, Intel down nearly 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Just out moments ago from China, there will be meetings Thursday of MOF and PBOC in China. So that may be something to provide anticipation to the market. I'm going to suggest it's their Thursday, Paul, which is our Wednesday evening.
That's right.
That's what we call the surveillance.
That's what
guest.
I understand.
Do you know to this day I still have to count the time zones?
Yeah,
to LA.
Yeah.
I have to go. Okay, it's 7 a.m. here, so it's 8, it's 6, it's 5, it's 4. Good morning, early good morning out on the West Coast. Really appreciate your attendance, Paul. October 3rd-ish. I just guess they don't want to be in the market. The election, and
sure,
the Red Sox and the Detroit. I just don't want to be in the market. Goldman Sachs pre-market is up 12%.
Unbelievable.
Off of October 3rd. It's a moonshot.
Yep, absolutely. I mean, they had it on the top line, the bottom line. The businesses you want to see do well, did
right.
well. Strength across the board, as Allison Williams was telling us. So, and their returns are just consistently, I'm talking 30, 40 years, consistently at the top of the pack.
I just put out the chart on Twitter and LinkedIn, folks. It's my chart back to August of 2007 of the major banks. And all of a sudden, Goldman Sachs is JP Morgan-like. Mm-hmm. Like they're the only one playing with JP Morgan on total return.
Yeah.
Back to 07, 08.
I mean, a trailing 12-month basis, stock's up 69%. How about that?
And well, really?
Yeah.
That's NVIDIA-like.
That's NVIDIA-like, I'm telling you. I mean, it's got a market cap. I mean, whew.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Fluent from Los Angeles, BOAC, Lisa Mateo here with the newspapers. Lisa, what do you have?
All right. More people have been talking to chatbots nowadays, right? So it's becoming like normal conversation. So the dilemma now is AI etiquette. Should you be polite to your chatbot? So, for example, if it helps you, do you say thank you? If it doesn't, do you say not nice words to it? Or is it just transactional and you say nothing? So this is becoming a really big conversation on social media. There's a debate whether bots are also keeping tabs on who is nice to them, because research actually shows that if you give an impolite prompt, it may lead to increased bias. It may not even answer your question.
For those of us clueless,
yes.
What's a chatbot?
So if you're talking to, let's say, like ChatGPT or something, or if you're, let's say, Siri? Online with anyone, with one of those AI assistants that you see somewhere, let's say at your bank or anywhere.
Yes. Ken Foley, help me here. What's the thingy here? You got an app on your phone, a QR code?
A QR code? No, that's different.
Now there's a scam where people are putting stickers over them to take your money.
Oh,
do you trust chatbots? Do you trust this new digital world? Lisa, do you trust it?
It's because I've put questions into ChatGPT and then I fact check it, and then it's not right. So it's tough.
Where's ChatGPT? Is it like Section 3 of the newspaper?
I don't know. Matt Miller loves it.
Really?
Yeah. Well, he's on the cutting edge.
He's okay. You have to do your research and double fact check everything.
I think we should always be polite in all our interactions.
But be polite. Okay, there you go.
Real and digital. Why not?
Yeah, I'm polite.
What's the downside?
AI etiquette. Who knew?
right.
Next.
Okay. Financial Times is saying Jane Street interns make more than Keir Starmer and Jay Powell. Okay, so they took a look at interns. Okay, this is some of Jane Street's current job postings. Quantitative research internship in New York doesn't even require finance industry experience. An annualized base salary of $250,000.
Yeah.
Also ads for software engineering internship, machine learning researcher summer gig pays $250,000 a year as well.
Yep.
So they put into context. They say Prime Minister Keir Starmer currently paid about $224,000. Jay Powell approximately $203,000. So they're just kind of putting this into perspective here.
Post-pandemic, this is a huge deal. Huge. I'm glad you did this, Lisa. Post-pandemic, there are wage discrepancies, like in accounting.
Correct.
It's comedic how underpaid accountants are right now. And you're seeing this, and they're readjusting to find where the market is. That's what it takes to get some of these right. Somebody was complaining yesterday about what they have to pay economists at schools. That's the run rate.
Right.
You don't get these kids out of, name the school, Chicago, Stanford, whatever. The starting is 200XX.
Oof.
22,500 my first job at Payne Weber, 1986. And I lived like a king, by the way, in the city.
Well, that's the thing. Can you live like a king now in New York City on 140,000 right now in New York City?
I know.
Single, and you got to dress decently at work.
Yeah.
Those Patagonias are expensive.
Exactly.
You can say that again. Okay, so New York
Katie
City.
Kaminsky's laughing. I see you up here, Katie. Katie's prepared. Katie knows. There's no one in Alpha Simplex that's not wearing a Patagonia match.
There you go. New York City restaurants, they have this big challenge now. Okay, Gen Z doesn't know what happy hour is.
This is sad.
Okay, yeah, it's very sad. Okay.
Are you doing this because I'm going to Rome?
No. The Post had an interview with the co-founder of Catch Hospitality. So he said the pandemic changed everything, right?
Okay.
People used to the 9 to 5 at 5:01. Yeah,
Sure.
you're happy, right?
Yep.
Okay, but now the hours have changed. So people are not working the same hours. They're working from home. Everything's changed. Gen Z is also drinking less. So now these restaurateurs were paying exorbitant amounts of rent.
Rent, right?
And their staff. So they're now dealing with this. So they have like non-alcoholic menus. Some are deciding to move to Dallas, Miami. Like it's changing the whole landscape of how they have to do things.
You can feel it. It's in real time.
Well, I got a happy hour drink before dinner last night in the city. Brass Monkey downtown. I haven't been there in 100 years.
My word.
Boom. It was like I never left.
But what's a happy hour price now?
I don't know. I just kind of I threw it in my cart, had a couple cocktails, and went to dinner. I mean, I don't worry about it, but
it's worth it.
But there were people there. There were young folks there popping in around.
Yes, but what they're starting to do is increase the food price to compensate for that.
Yeah.
So that's going to be a change.
But is Wednesday or Thursday? Folks, email it on YouTube.
When is
live
happy
chat.
hour?
Let us know. Is Thursday or Wednesday the new Friday? I think it's a really important
Well, here's
thing.
the thing. I've noticed that the traffic down to the Jersey Shore on Thursday afternoon is what it used to be Friday.
Yeah,
people are just
exactly.
not
So
working
people are not
Fridays.
working Fridays.
Yeah, so it's Thursday's a new Friday.
Okay. You got
That's
one
what
more?
it is. One more.
Squeeze it in.
Okay. New report says U.S. calorie intake could reduce by trillions by 2030 because of the popular weight loss drugs. So there was a study that came out that showed this. GLP drugs like Ozempic, Wegovy, they're starting to change how people eat. People want to eat healthier options, less processed food. They base this on grocery sales, but they're saying it's going to change how grocers actually stock and lay out the whole grocery store. So your store will start to look different after a while, as people start to eat healthier, eat less. So that's the whole point of this survey, is showing how the landscape of the grocery store is changing.
Lisa Mateo, thank you so much. The newspapers today are doing this for Paul Sweeney. I mean, folks, it's up in the air. Paul, if I'm in Rome, should I do a Sweeney and get on a Vespa?
Oh, yeah. How
I mean,
good
do
would
we
that
need
look?
a little video of,
Yes,
of
we need
me going down the
Definitely
Appian
need
Way
video.
like the TV show Riley?
Yes.
You know Ripley, the
Yeah,
TV
Ripley.
show
Yep,
Ripley.
yep.
Get on the Vespa and
Yeah,
do that
because
right.
you can't bring your SUV there. I mean, that's not going to work.
No,
In
you
Rome,
need-
you can't park it anywhere.
I need a picture of that.
I think
Surveillance coverage.
Yes.
team coverage. Where did it start? It started in 1953. Audrey.
Yep.
Greg.
Yep.
Roman Holiday. See ya.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning on your commute. Tom Keene, Paul Sweeney. We're going to get right to it. Citigroup earnings out. We'll go to Gerard Cassidy here in moments. Then Catherine Kaminsky will join us from Alpha Simplex. The bank earnings are out. We're going to jump on Citigroup in a second. Let's get right to it. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You've got it in futures, still wavering after another record high on Wall Street. Traders looking to today's bank earnings, and they are coming in fast and furious. We heard from Bank of America up more than 2% right now. Third quarter net interest FTE income met estimates. Then you had Goldman Sachs checking with them, up more than 3%. Profits soared 45% third quarter. Surprise increase in equity trading revenue, its investment banking business. And now, yes, Citigroup is coming in. We're up more than 2% right now. Tomorrow, we're on to Morgan Stanley. We'll keep you updated on all of these. So right now, NASDAQ futures down 9 points, 20,610. Dow futures up 7 points, 43,370. S&P futures down about 0.5% at 5,908. The two-year yield, 3.95%. That's little change. The yield on the 10-year, 4.08%, and that's down about 2 basis points. To commodities, oil dropped. Fears of major supply disruption easing. Right now, Brent crude down 4% at $74 a barrel. WTI crude $70 a barrel. More earnings, Johnson & Johnson. Their shares were higher, now down 1%. Stronger than expected third quarter earnings, but it also lowered its full-year guidance. And United Health down more than 3%. The company lowered the top end of its forecast due to higher medical costs. That's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Appreciate that. Now joining us, Gerard Cassidy with Tucker Anthony, RL Day. I love to say that. It's from years ago. With RBC Capital Markets, a quick look with Mr. Cassidy. Thank you, Gerard, for joining us here on Friday, I believe it was, with JP Morgan earnings. Here's what I see in the real world of the Bloomberg folks. JP Morgan comes out, and every third, every fourth headline is a ratio. Compare and contrast. Here's where we stand. Citigroup basically comes out ratio-free, finally, minutes into it, 40 headlines in, return on average common equity 6.2%. Gerard Cassidy, cut to the chase. Jane Fraser really doesn't want you to know what her ratios are, does she?
Well, Tom, there's certainly not anything to be proud of compared to their peers. However, as you know, this company is in a significant workout turnaround phase under Jane's leadership. So they've got some intermediate term goals to get that number into the low double digits. They're on that path. But to your point, the numbers on a return on tangible common equity, or ROE, certainly don't compare to its peers. Now, in their press release, they do include that number toward the top of the headline. But the big number, Tom, they beat on earnings, which is important, and she's making real progress. But this is a turnaround story.
Paul Sweeney, the BQ function, price to book. This is apples to apples.
Yep.
JP Morgan's trading at 2 times book. Citigroup's on the edge of a Deutsche Bank, trading at 0.66 times book. I can't even do that. It's like I can't do the math. It's like 70% less price to book than JP Morgan.
Gerard, where do you think Jane Fraser is in terms of kind of the turnaround here? What inning do you think the bank is in at this point?
It's a good question, because the big asset to dispose of is the consumer business in Mexico, which they expect to do next year in an IPO. They're going to separate the company from an accounting standpoint by year-end 2024. So in terms of what inning, I would say they're in the 7th inning. This Mexico transaction is big. So once that is completed, I would say by the end of 2025, they should be finished in the turnaround. And to Tom's point on profitability, Tom, what's really going to be a challenge for them is how do they grow the return on equity of their U.S. consumer business and the wealth management business, because those areas are just not up to scale to compete against a J.P. Morgan or a Bank of America.
Let me go to Wall Street executive Paul Sweeney here. Do you consider Paul Citigroup to be one of the big four banks, or have they removed themselves to a no man's land between the big banks and the super regionals?
I absolutely do consider Citi to be a large global institution. And, when I worked there, I felt like we could compete against anybody, anywhere, anytime.
Can they now?
I think they absolutely can. I think they can. But I understand, Gerard, your point there. One of the things, I guess, for Citi is just their cost base. I mean, that seems like something that's always been a challenge for them, to align their costs with where the business opportunities are. Do they have a better, process or strategy to ensure they're putting the capital in the right places?
It's a challenge for them because obviously they're global. They're our biggest global bank. When you look at their revenues from outside the United States as a percentage of total revenues, they surpass J.P. Morgan and Goldman. They're around 55% of revenues are outside the United States. So when I say they're the biggest global bank as a percentage of revenues, and that's costly. I mean, think of all the jurisdictions that you've got to have in your lawyers, your accountants, your compliance people. So they just operate with a higher expense base due to their core business, this global commercial banking, which they're very good at, but it is costly.
On short notice, Gerard Cassidy, thank you so much. A trooper to be with us today. He will publish for RBC at Capital Markets. When's Morgan Stanley? Tomorrow?
I think so, yeah. Talk about another good one. We'll see
tomorrow? We'll see
that. Numbers out of those guys.
Tomorrow.
Now, very patient, Catherine Kaminsky joins us with Alpha Simplex. Really important on trend. We're thrilled that she could be with us today. It's a bull market, and I guess the trend is your friend, as Mr. Zweig would say. Catherine Kaminsky, what's the quality of the equity trend right now?
Well, I'll be honest, it has wavered some, but we still see it starting to increase a little bit. So you're starting to see a little bit of acceleration in equity signals. They've been pretty noisy since the summer, but things are starting to look good. And I feel like every other week I'm going back and forth between nervous and then, hey, everything still looks good, particularly for the US, not outside the US.
So, Katie, we've seen some yields kind of creep up a little bit here. You blink your eye, and we got the 10-year above 4% right here. Where's the play in fixed income these days?
Well, what's interesting with fixed income is we really saw long signals strengthening, especially through parts of the summer. And, we've been pretty short in fixed income for a long time. So I thought, okay, this is it. But really, honestly, what we did see so far, which has been challenging, is that the market seemed to get ahead of the Fed and determine that we were going to see really big and really aggressive cuts. And then what you saw more recently is a repricing of Fed expectations. So honestly, to be a trend manager in fixed income and currencies this year has been really hard because it's all about timing the Fed, and that's been hard.
This is really important, folks. There's a point where there's no trend or gaming the trend. You get stopped out. Explain that experience right now, Katie Kaminsky. Are you getting where you have a belief, you have a setup, oops, you get stopped out?
Yeah, I mean, that's kind of what's happened in fixed income, right? You started to see really strong conviction in the trend. Like it was actually looking sort of recessionary outside of equity markets. There was definitely some concern, but then as you see markets move against you, you see consolidation in your signals. And overall, it's been like that a lot of this year, particularly in fixed income.
And the pro distinction, good morning, Andrew Lowe and the rest up at MIT. Katie Kaminsky, she read everything Asimoglu and Simon Johnson did. I mean, Katie Kaminsky, it was a glorious day for MIT yesterday.
Yes.
Katie, but I look at where we are, and if you have this lack of trend, position sizing really becomes key. Pros put in less, amateurs put in more. How's your position sizing been?
So, and yes, of course, we MIT people were really excited today because of what happened. And what you're seeing right now in terms of positioning is that the biggest trends that we positioning on fixed income has been challenging. If you look at equities, we've definitely seen positioning and strengthening, increased positioning in equity markets, particularly the US versus, say, China and Europe. But if you look in commodities, that has been also a very tricky call. Look at energy today. I think that's pretty much probably the most interesting trend this week so far.
Yeah, that worked out.
But short energy positioning is a good one today, for example.
She's on top of that trade.
It took me to 8:10 in the morning to look at oil. It's off 4% here. WTI crude oil off $3, just above 71, or just below $71.
IEA came out and said there's a lot of supply. I guess.
I don't know. I don't understand that stuff. All right, equities here. We're in the middle. We're just getting into the earnings season. Katie, what does the market need from this earnings season? Does it need to be a blowout earnings season, in line? What do you think this market needs?
I think the market just needs no negative surprises. I mean, I think the narrative really has turned more to slow and steady on the Fed. And so I think if we actually pivot to that direction, as long as we don't see really negative labor market surprises or negative earnings surprises, then that's a good barometer that this particular trend in equities is going to sustain. And, there's been just a lot of volatility, particularly with the election impending, also with geopolitical issues. I mean, oil was driven by some of that as well. So I think the equity markets just need not too much negative surprises. And I think otherwise, the U.S. growth picture looks pretty good.
Is it good enough for the Fed to maybe not have to cut all the time?
Well, that's what I've been asking myself. And the recent trends in the last month have actually been moving much more towards a slow and steady Fed, where we're not going to really see that type of movement. I mean, look at the yield. The 10-year, it went up to 4.1. I mean, if you're a mean reversion trader, that'd be great. That's a great potential buy-in. For trend managers, it's trickier because basically you see the trend is overextending and then correcting, which is tough.
Katie, one final question. Got to do an audible on this. You took your PhD at a small school in the Charles River, senior lecturer, Sloan School of Management. What is it like to breathe the same air as Acemoglu and Johnson, the Nobel Prize winners?
I am so excited, and you may not know this, but I actually spent 10 years of my career in Sweden, so where they kind of also do the Nobel Prize, and it's just such an amazing place where people are really changing the world, and MIT, for me, just seeing that. We had the JOIM conference was at MIT last week, Journal of Investment Management, and we had two of our junior quants there, and they actually saw Johnson speak before this weekend. So it's a very prideful moment for us here in Boston.
Yeah, Katie Kaminsky, thank you so much. Do something about the Red Sox. Catherine Kaminsky at MIT, and of course, Alpha Simplex as well. And again, we thank Simon Johnson for darkening the door yesterday at Bloomberg Surveillance before their big press conference. We go way back. His book, 13 Bankers, he talked about the abruptness, the rigor of Olivier Blanchard. There's a paragraph in his book, I'm going to say it's chapter 6, short little book, where he describes the moment the SEC screwed up and gave us 2007, 2008. That's the acuity you get from Simon Johnson.
Yep.
Where he just says, this is the moment. It was July of, I'll say 2004, I'm guessing, where the SEC changed some of the rules to allow for the leverage that was wrought. Katie Kaminsky, thank you for that. She lifts the market flat now on SPX, down 19.72. Bank earnings out. Goldman Sachs up nicely, and Citigroup less than nicely. I mean, they're up, I guess, fractionally.
Yeah.
Something like that.
Yeah, put a couple of % here pre-market.
The bond market's open today. It's better than yesterday.
Yes. Thanks for coming in.
Sweeney yield 3.95%. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Still little movement in futures after the S&P 500 hit its 46th record high of the year. Right now, NASDAQ futures up about 0.5%, but at 20,619. Dow futures up 4 points at 43,367. S&P futures up 1 point at 5,909. We head to the 2-year yield, 3.95%. That's little change. The yield on the 10-year, 4.07%, and that's down 2 basis points. To currencies, the dollar weaker, Japanese yen stronger at 149.31 against the dollar. We have the euro weaker, British pound stronger, Bitcoin. It was at this time yesterday up about 3%, now down about 0.5% at around 65,000. Earnings, check in with Bank of America, up more than 2%. Investment bankers, traders helped earnings, top estimates. Goldman Sachs right now up nearly 3%. Profits soared 45% in the third quarter. And Citigroup up more than 2%. Traders posted the decade's best third quarter. Tomorrow, Morgan Stanley. I want to stick with the financial sector. Go to Charles Schwab, up 9%. Earnings per share topped estimates, said it cut some of its expensive debt. And finally, State Street up more than 1%. Revenue third quarter beat estimates, but it also announced that CFO will step aside in February. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. You have a big moment. You get Harris on, you get Trump on, and other big candidates. Tester out in Montana, maybe as an example. And it's a big deal. But I'm sorry, folks, today at 12 noon, with Joe Matthew, Kaylee Lines leading it off at 11:30, is a bigger than big deal just on the events of the last 72 hours. Our John Micklethwaite, our editor-in-chief, in conversation with the former president, Donald Trump. We get wisdom from Jennifer Lawless. She's at UVA, outstanding on the politics of the American system. Jennifer Lawless, as you look at the campaign now 3 weeks out, what does Mr. Trump have to accomplish today at the Economic Club of Chicago?
I think Donald Trump has to make it clear to business people that he can only win the election if he focuses on the economy and if they do everything they can to act as surrogates for him. He's had a very hard time staying on message. He's had a very hard time convincing people that he has the discipline to be president again. And so this is a final shot to get people who are in that industry to make his argument.
No surprise, we had Simon Johnson on yesterday, the newly minted Nobel Prize winner, and he knows I'm going to give him the question at the end of the conversation. And I asked Professor Johnson about tariffs, and he went mental like anyone at Darden or UVA would, and just went nuts. Who out there is supporting President Trump in any tariffs, let alone sizable tariffs?
People who don't know what tariffs are. If anything, this election has made it very clear that the two sides are talking past each other, that the Republicans have managed to suggest to the American public quite successfully that fact-checking is partisan, and that allows Donald Trump to call a tariff anything that he wants and not take into account the fact that it really is a tax on the American people.
Jennifer, is the economic message for the Donald Trump and his campaign primarily or simply tax cuts? Is that kind of where they base most of their economic call?
That's the plan. It's unclear that he would be able to get them through, but that is the plan. But the other piece of the message is that the Biden economy didn't work and Kamala Harris is responsible for it. And those metrics just don't play out. The evidence isn't there for it. But inflation, even though it's at the lowest rate that it's been in 4 years, is still inflation, and people still feel it in their pockets, and the Democrats haven't fully figured out how to thread that needle.
Is he going to veer off economics today at the Economic Club of New York? I mean, given the cadence and patterns supporters of Mr. Trump and those against Mr. Trump have seen over the last number of weeks, is his basic economic strategy to not talk about economics?
If I were a betting woman, I would suggest that there will be a lot about immigration in the speech. The minute he mentions the economy, he doesn't seem like he can pull himself away from talking about illegal border crossings and perpetuating myths about what immigrants have done to the economy. It's not only immigration.
Whoa, that's important. Professor Lawless, what have immigrants, legal and not legal, done to the economy?
They've actually allowed it to grow and thrive. Donald Trump wants to make an argument that immigration has taken away Americans' jobs. But I think what a lot of people don't seem to realize, and the message that the Harris campaign is trying to make clear, is that there are a lot of jobs out there that people need done. And the immigrants are the backbone of this economy.
Lisa, Paul Sweeney, we live this every day in a cosmopolitan New York. Walk X number of blocks, north, south, down any street in New York, and tell me that many of those immigrant jobs, they're only being filled because of immigrants.
It's been that way since the beginning of this country. I don't know why today would be any different. Jennifer, 21 days roughly to the election. Is there anything that can move the needle one way or the other? Because it just feels like it's so tight, and both sides are so entrenched.
It's hard to imagine any big event or what we used to call an October surprise, largely because people have already started voting. It seems like with only about 4% of people saying that they're undecided, this is now officially a turnout election. And so when Kamala Harris goes on Fox News and makes her case to Republicans who might have supported Nikki Haley, that could matter. When Donald Trump goes on Joe Rogan's podcast and tries to get a sliver of black men to vote for him, that could matter. These aren't big shocks to the system. This is really just about the margins.
In a get out the vote scenario where turnout is going to be key here, does that favor either side at this point typically?
Typically, not necessarily. In 2020, it certainly did because the Democrats had a very, very clear mail-in ballot strategy. They do again this time around. The Republicans aren't as opposed to early voting and absentee ballots as they were in the past. We'll see if that message has trickled down to their voters. But my hunch is that similar to previous elections, the country is really, really split, and both sides are going to do everything they can to turn out their voters.
Let's go to your wheelhouse, the study of women in politics as well. Here's a bold question that came up to the dining room table last night. Jennifer Lawless, can a woman be elected president in America?
Absolutely. I think it's important to keep in mind that although Hillary Clinton lost the electoral vote, and that's how we elect presidents, she did win the popular vote. So more people cast ballots for her than they did Donald Trump. They just didn't live in the right places. Kamala Harris is doing everything she can not to repeat the mistakes of the Clinton campaign. And if we look at the polling, it's pretty difficult to imagine a scenario whereby Harris doesn't win the popular vote by several million. Whether that translates into an electoral margin is an open question. But people are willing to cast ballots for women, and they have been down ballot for decades.
Jennifer, thank you so much. Professor Lawless at the University of Virginia. Paul, it's going to be something. I do not know what to expect at 12 noon other than, they'll be up on a podium with a worthy gathered in Chicago. And you just dive in, or John Micklethwaite will dive in with President Trump.
Yep, absolutely. I mean, I try to keep it, kind of on script, on focus, on point for some economic discussion. But as Professor Lawless pointed out, oftentimes the former president can go off script.
Of course, some of that is the if Trump wins, the construction of his cabinet and the construction of his government. And I don't think we're at that analysis yet. I haven't seen too much of that on Harris or Trump, but we'll have to see on that as well. Looking at the data screen right now, really getting out, we haven't mentioned this, retail sales coming out here, not today. Economic data at 8:30. We got the New York Fed. I love this. The New York Fed one-year inflation expectations. They take that analysis at 57th Street and Fifth Avenue. That's right where they do that.
Yep.
But a lot of data coming up here in 2 days, the 17th retail sales. For me, is the big data of the week. We're out on YouTube. Subscribe to Bloomberg Podcast. On this break, folks, I promise I'm going to get on live chat on YouTube. I've been derelict in that duty the last number of days. On Apple CarPlay and Android Auto, and of course, on 99.1 FM in Washington, 92.9 FM in Boston, all the way up to Mount Katahdin. In Bloomberg 1130 AM, our flagship in New York. Please stay with us from New York City. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Still a little movement in futures. Earnings set to drive U.S. sentiment this week. Bank earnings, a big part of it. Check back in with Bank of America up 2%. Goldman Sachs up more than 2.5%. Citigroup up more than 1.5%. Company earnings, Walgreens up nearly 5%. Profit guidance for 2025, it met estimates, but it also announced plans to close about 1,200 stores nationwide over the next 3 years. That's in order to cut costs. After the bell, we'll hear from the likes of United Airlines. Have to point out shares of NVIDIA, Advanced Micro Devices, Intel. After a big day yesterday, shares lower. Sources saying the U.S. considering a cap on AI chip sales from them and other companies to certain countries. We have NVIDIA down 0.5%, AMD down about 1%, Intel down about 0.2%. That's a Bloomberg Business Flash. Tom and Paul.
Two things here. Am I seeing a lot of stores close? I saw 7-Elevens closing hundreds. You just mentioned Walgreens.
Yep.
Closing 100. There's a whole trend going on here.
I don't know if it's the e-commerce thing. Now, I mean, pre-pandemic, it was like 7, 8, 9% of sales. Now it's well north of that, north of 20%.
We need to look at that number because to me, the way I look at it is in the walk-up, I look at the number of boxes downstairs and now the new envelopes from him. It just gets bigger and bigger.
Yeah, it's good stuff. We'll see.
We'll have to see. That's something to.
There's still a lot of vacant stores here on Lexington Avenue and Third Avenue.
It's like stunning to say the least here. Right now, futures flat is where we are. We got some bank earnings out, and we got some bank earnings coming up, and economic data tomorrow. And of course, our economics, it is led by Commonwealth. Our economic indicators brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. And we thank Commonwealth for, just foundational support of what we do here. Retail sales is what I'm looking at in 2 days. Just out, red sticky on the Bloomberg. Canadian inflation less than expected. Peter Cheer joins now with Academy Securities. Peter Cheer, is that the global dance from the deflation of China to a number underneath in Canada? Is disinflation the trend?
No, I don't think so. I think we're actually seeing a little bit of a rebound in inflation. I think, we're going to have some supply chain issues potentially from the hurricanes. I think we're also going to see some demand as people, try and rebuild from the hurricanes. So I think the U.S. is going to see maybe a slight rise in inflation over the next 2 to 3 months.
So, Peter, stepping back from that, I mean, we're getting into earnings season here, and some of the early bank earnings have been really solid here. The Fed seems to be cutting interest rates here. How aggressive do you want to be out there when you're just thinking about your risk tolerance these days when you're looking at the stock market, the bond market, and so on?
I think I've become fairly comfortable now with things like the banking index. We're looking at the Russell 2000. You're actually starting to see a real base build. And what I like about them is their earnings almost have such low expectations that I think we'll see bounces on those. I think the big thing is going to be really how does tech do for the overall broad market? Can the Mag 7 deliver? What happens to them? I think there's a pretty high hurdle. We saw that a little bit last earnings period, right? They had what looked like really good earnings announcements on the surface. The stocks would often bounce and then fade as people realized expectations have been set so high.
Well, that's really nicely said. I mean, really nicely framed, Peter. But, Paul, this comes down to CapEx. I mean, they're going to come out in their conference calls, and they're going to use the vision about the continued spend here. That's what we saw last quarter.
And it's interesting. I mean, I guess for a lot of folks, Peter, maybe myself included, NVIDIA is kind of my bellwether for all things AI. And this thing's actually been strong over the past month or so, kind of reaching new highs yet again. So is that Mag 7, maybe it took a pause, but can it still be the leader in this group?
Again, I think last time we, rose a little bit coming into earnings. So we'll see if they can sustain it through earnings. And like you say, it's a great point. Like, we're going to be listening to AI spend from other companies. What I think was most impressive, right near the end of last quarter's earnings, you had Walmart come out. And Walmart was one of the few really large companies that specifically said AI had been a big driver for them. So that should help spend. So that's what we're watching, right? Do people continue to spend, or have they already spent and are trying to figure out, okay, we bought a bunch of AI, what do we get out of it? And that's my concern, is that's the stage we're at right now.
Yep. Yeah, that's kind of what we saw all over the last quarter. Looking at the fixed income business, again, the 2-year Treasury, 3.94%. Do I need to be more of a hero and take some credit risk here?
Yeah, I continue to like credit risk. I think yields, I'm a little bit surprised that we got above 4, all the way to 410 on the 10-year so quickly. I think 4 to 425 is about the right sort of range. Maybe we get to 4% on twos as people realize the Fed's going to be slower. I think the neutral rate, which I know you guys talk about a fair bit, is going to be really key to that. Away from that, I like credit risk. I think at the higher end and high quality, short dated, why wouldn't you want to own corporate credit at a nice spread to T-bills, right?
Right.
DC's dysfunctional to some degree. Corporates are going to pay on time. They don't even think about messing with that. And at the bottom end, you've got all this private credit, and now you got banks looking for NIM. So I think credit does surprisingly well.
Peter, not to make light of it, but Academy Securities really emphasizes a geopolitical analysis forward. I don't know the niceties, but if you get out a map of Taiwan this weekend, it looks like a Stratego game from when we were 12 years old. I mean, basically, in drills or whatever, the Chinese government of Beijing, am I right, Peter, surrounded Taiwan? Are your admirals concerned?
We see this as part of China's policy where we do not believe that they're even close to, prepared to attack militarily. They're not sure how good their military is. Right, on paper, it looks great, but they had some issues last year. They know world opinion would really turn against them. So as they're trying to boost their economy, attacking Taiwan would be, the mistake for them. But what we do believe is they're going to kind of continue to put pressure on them politically, but also militarily, just to remind Taiwan how close they are, how aggressive they can be. Because I think their goal is ultimately for Taiwan to give up and fold into China, peacefully. And this is all part of that. It is concerning, though. We're watching that. We're watching more and more joint exercises between China and Russia. Right? The global risk is very high as we come into our election season.
So, Peter, just following up on the China discussion, we had some stimulus come out of China over the weekend here in terms of some fiscal stimulus. I guess the people kind of feel like it was a little bit underwhelming, but maybe there's more to come. How did you guys view that?
Yeah, that's kind of our view as well, that China, basically, if we take a step back, the Chinese Communist Party has to protect itself. A weak economy with a struggling middle class is not helping that. So they will do stimulus. I think they're going to do it slow and get it to work. One thing that I thought was neat is overnight there's reports that they might do unrealized capital gains on foreign holdings. Yep. So all of this I see as China trying to pull it back, right? The stimulus is going to be designed to help the local, the domestic market, help domestic stocks, help domestic purchases. And this threat of, taxing Chinese investors on their foreign holdings would make them sell those. So I think China is going more and more insular, and this continues that deglobalization, which we've been talking about now for a couple of years.
I look, Peter, at the simple idea we're in a bull market. The bears have been silenced as well. Do we see valuations that signify exuberance? To me, this is a key debate.
And again, I think that's why I'm leaning so heavily towards things like the banks, towards this smaller cap and value, because there you can look and say, hey, there's an argument for this. I think you're starting to see a little bit more interest in foreign stocks. So I think the valuation case is away from that kind of, the key drivers, right? The big drivers of our market, the top 10 to 20 stocks. I think I look at those valuations and yes, I get the growth story, but is it ahead of itself?
I mean, Paul, I'm looking, it's like a Damien question, frankly. I'm looking at DXY at 103 and Shears flogging the international stocks.
Yep.
I'm waiting for weak dollars. All I know. Get one more in here.
One more is Peter, just energy here. We've seen just crude oil get whipped around here. Now we're down another 4% today after we had that big escalation in oil prices from the rising tensions in the Middle East. Is energy a place you guys pay attention?
We pay a lot of attention to it, and I've got to admit, I was wrong this time. We'd been bullish for a little while, and we thought Israel was likely to escalate and start attacking some of Iran's oil production or oil transportation facilities. It looks like Israel's taking that off the table for now. That, I think, is what's going on overnight with the selling. We still think, at least from a military standpoint, that would be Israel's next step, is to try and stop the money that's coming into Iran, because ultimately, right, you want to follow the dollars. selling oil has been Iran's main chief of money making, and that's what they use then to fund Hamas, Hezbollah, and all their proxies. So militarily, we thought they would go after it. So this is a bit surprising to me. So probably have to slink home a little bit right now, but I would double down. I do think the risk is geopolitical risk will create an energy spike sometime in the coming month or two.
Peter Chair, thank you so much. Greatly appreciate Academy Securities. Nice update there, particularly with a link into the geopolitics of the Pacific as well. There's a lot of other geopolitics out there, to say the least. Futures flat, the VIX 19.70. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. It is 3 weeks until Election Day. Yesterday, Kamala Harris and Donald Trump campaigned in the battleground state of Pennsylvania, Harris in Erie and Trump in Oaks.
More people tell me about grocery bills, and we're going to do a lot of things.
He has no plan for how he would address the needs of the American people.
At stake are 19 critical electoral votes. Former President Trump is likely to face sharp questions on his economic plans when he sits down later this morning for an exclusive interview with Bloomberg News Editor-in-Chief John Micklethwait. That conversation at the Economic Club of Chicago begins at noon Wall Street time. Our coverage begins at 11:30 this morning on a special edition of Balance of Power on Bloomberg Radio and Television. Officials say federal disaster workers paused and then changed some of their hurricane recovery efforts in North Carolina, including abandoning door-to-door visits after receiving threats during a wave of misinformation. The Rutherford County Sheriff's Office said it received a call about a man with an assault rifle who commented about possibly harming FEMA employees and targeting a militia against them. Former FEMA Administrator Pete Gaynor.
We have the best mission in the federal government, helping people before, during, and after disaster. I think we have some of the most dedicated employees that are trying to do that for their fellow Americans. And stuff like this, it's not good for morale for anyone on the team.
Former FEMA Administrator Pete Gaynor. The man was later arrested and charged with a misdemeanor. Giant pandas are on their way back to the National Zoo. Bloomberg's Amy Morris reports from Washington.
A pair of 3-year-old giant pandas named Bao Li and Twing Bao left a research facility in China yesterday as they made their way on the Panda Express to Washington, D.C. This is part of a new 10-year agreement with the Chinese government, and the exact terms aren't clear, but under previous 10-year agreements, the Chinese government would get $1 million each year per bear. Any cubs born in the U.S. are typically returned to China before they reach the age of 4. Once these giant pandas arrive, there will be an extended quarantine and acclimation period before they're introduced to the public. In Washington, Amy Morris, Bloomberg Radio.
You're so cute. Global news 24 hours a day.
So
and whenever you want it with Bloomberg News Now. I still don't know how they survive in the wild. I'm Michael Barr. This is Bloomberg. Tom Paul, Lisa.
What a magical time for New York. Tonight, Cleveland, New York. Tomorrow night, LA at Citi Field with the Mets. The cheapest ticket for Yankees is $85. The cheapest ticket for the Mets is $165.
Yeah.
What is that? Does that surprise you?
I don't know. I mean, it's just, I don't know. It's interesting. I think if you're a Mets fan, you're not there very often at this point, league champ. So maybe it's a little bit more special. I was walking through Penn Station last night. There was a Ranger game at Penn Station. Jets were playing, Yankees were playing, Mets were playing. I mean, it's just amazing time in New York for pro sports teams.
Do you think Mayor Adams has to go to both games throughout the first ball? I mean, come on, he's got the hat to go with it. You know, he's got the New York Mets Yankees hat, the two-for hat. And, I mean, you throw out the first ball.
There you go. We've got that up on YouTube. Yep, there you go.
It's up on YouTube.
Yeah,
we do that.
Yeah.
To aggravate live chat.
He's a politician.
We do that, you know.
All right, we'll see. Baseball, alive and well in New York.
It's exciting.
Yep.
Garrett Cole, he's a stud. I mean,
he's the
like
real deal. He's a real ace. He's a real solid ace on the Yankees
I
staff.
saw him tear Yu Darvish of the Padres apart once, and Mr. Cole was clinical.
Yeah.
There was no emotion, no fanciness. It was just like, this is what I do, get out of the way.
Yeah, he gets locked in. You can see that stare he has.
He was under this. Michael Barr, is there anything to say about the Tigers? I mean, it's like...
Heck of a run.
I love him.
We'll call him a heck of a run.
I love him. I'm going to hug him.
Spring training. It's like days away.
Lakeland.
Flat right now. Stay with us from New York City. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still wavering after the S&P 500 notched another record yesterday. We have some more economic data out today. New York State factory activity, well, it swung back into contraction territory this month, hitting a 5-month low. Orders and shipments weaken. Tomorrow, we're on to import prices, followed by retail sales, initial jobless claims on Thursday, and housing starts building permits on Friday. So let's get to the markets. NASDAQ futures down about 8 points, 20,610. Dow futures down 15 points, 43,348. We have S&P futures down nearly 1% at 5,907. The 2-year yield 3.94%. That's down 1 basis point. The yield on the 10-year 4.05%, and that is down about 4 basis points. Commodities to oil: Brent crude $74 a barrel, WTI crude $70 a barrel. Isaac on YouTube wants to hear gold. Let's get to it. Spot gold up about 0.1% at $2,653 an ounce. Shares of beauty company Coty down more than 5%, lowered its sales growth guidance, and that's pushing shares of L'Oreal down 3% in Paris. Ulta down about 0.2%. Companies making news: Boeing. They plan to raise as much as $25 billion, try and boost liquidity and withstand that prolonged strike. Shares are up nearly 1%. And finally, Stellantis ending its work from home push after a profit warning. Jeep maker now on staff in the office 3 days a week on average. That's Bloomberg Business Flash. Tom and Paul.
Does that mean they were in 2 days a week?
They were, yes, because most of them worked from home. So now that, 3 days, the must.
Who is Stellantis?
They make Jeeps.
They're like French, but they also do
Jeeps.
Chrysler.
The Jeeps,
yes,
yes,
the
and
Chrysler
Chrysler
stuff.
So
what are they
working
3
out.
days a week? I don't know.
Got to come in the office.
This is a really important guess because we're going to get down to brass tacks on the recent strike that we saw. With Anton Posner, we usually talk about the Red Sea and what's going on, Panama Canal. Forget about it. You're a kid out of maritime school, and you're in the Ironbound in Newark in a Portuguese restaurant.
Right.
It's like out of the movies, right? What was it like in your ute with the ILA in Newark in a Portuguese restaurant?
Yeah, good morning, guys. And I tell you, New York Maritime College prepared me for a lot, but didn't prepare me for jumping into the question of automation at Port Newark with Union Longshoremen like I did. So came fresh out of school, was a ship planner for Neptune Orient Lines, working in Port Newark, stowing container ships, right? And at that time, I was working on stowing container ships using colored pencils and paper and then faxing it around, right? And at that time, the steamship lines were starting to implement some sort of automation.
How far behind is America on technology of our logistics, our shipping, things that matter?
I'll use a statistic for you there. World Bank rankings of global container ports put the top 50 most efficient container ports in the world, not one single American port in that top 50 ranking. I think Charleston, Savannah, maybe we're 53, 55-ish on that list.
What does that do to our listeners and viewers? I mean, what's the ramifications? So what?
Yeah, it contributes to inflation, Tom. We're talking about every time a ship has to come into a port carrying everything that we want to buy for Christmas, right? It's a more expensive port call for that ship, for the ship owner. All of that translates into a per unit additional surcharge, right? That's hidden in the price of the goods that we see on the shelves. So we have a situation here, right, where as I saw when I was 22 years old, coming out of school, the union wants to, of course, focus on job security and not having their jobs replaced entirely by robots that move containers around ports and discharge and load ships. But it's also has a very significant effect in terms of the cost of the goods that we pay for.
So I guess where we are now is the union and the ports have agreed to, I guess, get back to work, and they're going to try to work something out.
Right.
How many jobs do you think are at risk from automation? If the ports were to get what they want? Because both sides have valid points here, but presumably this industry needs to move forward here in the U.S.
Yeah, exactly. I don't have a good figure specifically on how many jobs are at risk, but let's say, a ship coming into port maybe has labor per gang, per hold on the ship of maybe 15, 20 guys. This is off the top of my head, guys, and reaching back.
Welcome to surveillance.
Yeah,
Everything
exactly.
we do is off the top of our head.
I love it. I love the challenge, and that got to be prepared for everything, right? So, we're talking about automation that could knock certainly several jobs from that particular gang, that particular hold.
So after what we've seen, what's the power of the union? Can the shipping people or the government, can they force marginal technology on the union?
It's difficult because you're not talking about government control of ports, right? Most of these facilities are port authority owned, so local government owned, state government owned, and then operated by private companies that then negotiate with the union, the U.S. Maritime Alliance, right, USMX, that was negotiating with the union. So it's not a government entity. What we saw in this case was kicking the can down the road, right? The issue of the wages was settled, but the automation was put off until January. This was an all-of-government approach by the Biden administration to go in force, to put pressure on the ship owners, the steamship lines that are paying the wages, that have had record earnings over the past several years. And of course, nobody in the administration wanted a prolonged port strike in the coming up to the election, right? So this was very much so. If you see some of what's been written about it, the amount of resources that the Biden administration deployed was pretty significant.
Is the union structure the same on the West Coast as the East Coast, or are they two separate beasts?
It's two separate unions, but very similar. On the West Coast, it's the International Longshoremen's and Warehousing
Marlon
Union.
Brando would be familiar with it.
Yeah, very much so. Yeah, it's very movie-like, right? So, but it's a separate union, but has a very similar focus. Right?
A delicate question I've got. Paul and I have talked about this. Are our military in harm's way because of the shipping issues of the Red Sea? When you look at it, when you look at drone warfare and such, why aren't we cleaning that up?
Yeah, certainly the military is certainly at risk, right? We've seen in the past where a rogue missile projectile, right, can get through. We've seen American Navy ships hit hard by a speedboat right in Yemen that took them out. So it doesn't take a lot of sophistication there. Right now, we're seeing a somewhat unified approach by other countries. Most of the ships that are transiting the Red Sea, most of the ships that have been affected are not American flag ships. These other nations need to step up to the plate to some extent and fulfill their share. We see other NATO countries deploying resources. India, certainly Egypt has a significant amount to lose because of the traffic not transiting the Suez Canal. So we're talking about a real revenue loss there. But yes, our American military, American Navy, our Navy at risk out there? Absolutely. They're a target of the Houthis for sure. And switching over to the South China Sea too, if you want to go there, I think even more of a significant risk.
Thank you. What a window. Was the food good at the Portuguese restaurant?
Food was excellent. But as a 22-year-old, I didn't know anything about wine.
You just said
I was fresh out of school. You could have fed me anything at that point, Tom. I would have thought it was great.
Big portions. Thank you so much. What a great window there into some of the backstory here of this. And the strike's over until sort of the feeling.
Yeah, until they have to come back again.
There's an
January.
until-y thing.
Yeah, kicking the can down the road is the right way to phrase it.
So here are the lyrics. Nat King Cole, Arrivederci Roma, goodbye, goodbye to Rome. City of a million moonlit places, city of a million warm embraces.
There you go.
It's like tourist nuts. The streets are packed.
You're going to be right there with them.
The Nat King Cole Rome of 1958. It's so gone. We're going to Rome. Nat King Cole.
Arrivederci Roma. Adios, goodbye, au revoir. Todos son recuerdos que me matan de aquella juventud enamorada. Yo quería amor y ella decía siempre no.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr, everyone here today in 9 o'clock hour to get the markets open. Running green in the screen. Goldman Sachs really doing better than good.
Better than good, yep.
Bank of America, Citigroup.
Yep. Yeah, they'll be just fine.
In the game.
Yeah, they're going to be just fine.
They're in the game. I mean, there's the banker and his Morgan Stanley, I believe, out tomorrow. I believe I've been briefed on that as well. We've got a guest coming up here, David Bianco with DWS, and this is going to be really timely about the arch question. Okay, it's a bull market. How do you participate?
Sure.
I'm still trying to buy the first share. I don't know if you know this, folks, but in my suit here, I've got buy tickets over here like Ace Greenberg and sell tickets over here. I almost got the buy. I was going to do an odd lot. Odd lot of NVIDIA.
Sure.
You know, I didn't want to get too carried away, but I'm still triple leveraged, all cash. We'll talk about this bull market with Mr. Bianco as well. And Fish is up 3, Dow goes the other way. The VIX 19.6. And Sweeney yield bond market is open. And Paul, you mentioned this a couple times. Yields are higher, which means mortgage rates have reversed and gone higher.
Gone back up a little bit here, but I think I think for people to sell their homes, get out of their homes, you need something with a 5 handle for sure.
IEA and others say there's a big oil supply, I guess.
Yep.
Oil, we're talking 80. We're down $6 in the last number of days, $3 this morning. Brent, 74.42.
I know. That was short-lived at that spike.
I don't know what to make about it. I just, Amrita's son was in yesterday.
Yep.
You took notes. What did she say?
I mean, again, it's supply, demand, and there's plenty of supply out there for sure. And then if you think the demand coming out of China is going to be weaker than expected, that argues for lower prices, notwithstanding some of those geopolitical issues.
Good morning on YouTube. After your commute, in the office, at home, YouTube. Subscribe to Bloomberg Podcast, Growing, Building. Each and every day, 12 noon today.
Yes.
Donald Trump will be featured on Bloomberg Radio. He's in conversation with John Micklethwait.
That'll be good.
In Chicago.
Yep.
It'll be interesting. I don't know what to expect. We'll see. John Micklethwait, our editor-in-chief, will do that.
He knows what he's doing.
From the, and we say good morning to Interactive Brokers. And from the Interactive Brokers studio, Our Bloomberg Business Flash, Lisa Mateo.
You got it. And we have futures. Still little change, and this is after another record high on Wall Street. Traders looking to the bank earnings. We've had a lot of them. Bank of America up more than 2.5%. Goldman Sachs up nearly 3%. We have Citigroup up more than 2.5%. Tomorrow we're on to Morgan Stanley. Right now we have NASDAQ futures up about 8 points at 20,628. Dow futures down 64 points, 43,299. S&P futures down about 2 points at 5,910. Bond market back in business after being closed yesterday. We have the 2-year yield 3.93%, down 2 basis points. Yield on the 10-year 4.05%, and that's down about 5 basis points. To commodities, Brent crude down more than 3.5% at $74 a barrel. WTI crude at $70 a barrel. Johnson & Johnson shares, they were higher. Now they're down about more than 1.5%. It reported stronger than expected third quarter earnings, but here's the thing, it also lowered its full year guidance. And finally, United Health down more than 5%. The company lowered the top end of its forecast due to higher medical costs. That's a Bloomberg Business Flash. Tom and Paul.
Listen, thanks so much. David Bianco with the CIO, DWS. Let's get right to it, David. At the bottom of your note, preferred Trump win play, oil services. That's right. That's the way you win if Mr. Trump takes the trophy.
Well, good morning, Tom. I mean, that's a question that people keep putting to us, how to play this market around the election. We've tried to point out there's more to consider than the election, but obviously the election's important, particularly for fiscal policy. I think if Harris wins, there'll be corporate tax hikes, even if there is a Republican Senate by a slight majority. But yeah, oil services, drill baby drill is the thinking around a Trump win. Probably good for financials and tech and healthcare, other sectors where there's some, always heavy-handed regulatory concern that might be relieved if Trump wins and puts a new administration together and regulators. But look, I think this market is going to have a difficult time making substantially newer highs into year end because it's priced for perfection. It's basically priced for some outcome that brings no tariffs and also brings no tax hikes and assumes the bond market's willing to just ignore this outrageous deficit that's gone on for so long.
So, I mean, I don't know. I've been in this market forever. We've always ignored it. What's different? I mean, why wouldn't we ignore it?
Well, I mean, there is the good reason to ignore all the challenges in the world and uncertainty politically, even in the United States, is that America is the stock market. It is the companies of this wonderful index. And the S&P 500's aggregate market capitalization is now $49 trillion, maybe $50 trillion this moment. And America's rich. And so when you look at what's going on with financial conditions, look no further than the equity market with, up total return 25% year to date, 50% past 2 years, total return near doubling since the start of 2020. America's rich, America's confident. The tech companies, kind of embody all of the optimism that's out there, but it's not just optimism and the confidence. These companies have profits and capital expenditures that are keeping the economy going.
And that's what Chuck Clough, excuse me, the blue button, the Detroit Lion blue button, I forgot to press it. That's what Chuck Clough said earlier.
Yep, absolutely.
The cash flows there.
If you still believe technology is going to be the driver of this market higher, it has been for the last 10 plus years, can it still be?
I do not expect tech to break down. If tech breaks down, the market breaks down, and financial conditions will be harmed by the equity market breaking down. But, I'm trying to find ways to participate in this rally without overpaying and acknowledging that there's always uncertainty and we want to diversify. So I keep looking for other ways to play AI, like electric utilities and electric equipment, and ideas that, there are companies that will benefit from deploying AI, both in tech and communications and probably financials and healthcare. And the healthcare sector, the elections may affect managed care and distributors, but, the healthcare sector is this undervalued, underappreciated space of innovation, and that is a big part of the U.S. economy that I have confidence in, too.
But, David, your work has always been a measured work. If you do what you say, do you zero out in the Mag 7? Do you hold them? What's the formula, the process to unmag 7 your portfolio?
Well, I try to neutralize Mag 7. I also like to say grade 8 because that includes Netflix and that was one of the original FANG stocks and a big driver of earnings growth. When you're driving without headlights, you got to go slow and you have to be careful about what might be around the corner. So we're trying to take a fairly neutral view on that. There's some were overweight, some were underweight of the grade 8. But as I said, I'm trying to find other parts of the equity market that are underappreciated as people are having just so much fun amongst tech and amongst the AI leaders. I see that in healthcare. I see that in electric utilities. As long as this market does well, the U.S. economy will do well, and thus financials should do well. And you see that this morning. And that has legs. And it probably has legs even if you've got a further steeper curve as people worry about this deficit.
How about fixed income? I mean, we're getting some positive total returns across the fixed income space led by U.S. corporate high yield. How do you think about the fixed income space?
It's not a bad place to be, and it's nice to get a return. Of course, people are upset about missing out about, everything pales in comparison to this equity market. We do think that things like 2-year, term treasuries are a good place to be. And my view is, and we have to watch these things, is that unless inflation is below the Fed's target for about a year, which I think is unlikely, unless there's fiscal tightening, let's see this election's outcome, I don't see why the Fed should go below 4% until we have the next recession. So, when you're close to 4-ish% on a 2-year, I think that's attractive. 10-year nominal yields, look, we need to see some fiscal discipline.
Okay, David Bianco, thank you so much.
Thank you.
CIO at DWS. Interesting mix there.
Yeah.
It's strange. I don't know what to make. 2 p.m. after the surveillance nap, after the Trump interview today, I'll look at the market and, like every day, Paul, there's a bid to it.
There's a bid
some
to it. I'm
days
looking
it's
at
sweet,
just the S&P equal weighted index, Tom, up about almost 15%.
I'll see. I don't know. I got to take the Michael Barr approach to investing. Just buy one stock,
Yeah.
He owns Atlanta Braves.
Exactly.
Publicly traded.
That's it. You're darn right it is.
That didn't work out. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. It is officially 3 weeks until the election. Vice President Kamala Harris zeroed in on former President Donald Trump's comments on the U.S. military.
He's talking about the enemy within our country, Pennsylvania.
The two candidates took the fight for battleground Pennsylvania, Harris in Erie, Trump in suburban Philadelphia. Following 2 medical emergencies in sweltering conditions in the arena, Trump bailed on his town hall on the economy and played music in Oaks last night.
They're both okay. Yes. They're both in good shape.
That's wonderful.
Would anybody else like to faint? Please raise your hand.
Former President Trump is likely to face sharp questions on his economic plans when he sits down later this morning for an exclusive interview with Bloomberg News editor-in-chief John Micklethwaite. We get more from Bloomberg's Saleha Mohsen in Washington.
We should expect to hear things that investors are interested in. So that's tariffs, that's U.S.-China, that's tax policy, that's regulation. Those are all the topics that we should expect to come up this afternoon.
Bloomberg's Saleha Mohsen in Washington. That conversation at the Economic Club of Chicago begins at noon Wall Street time. Our coverage begins at 11:30 this morning on a special edition, A Balance of Power on Bloomberg Radio and television. Israel said it's weighing the Biden administration's misgivings over its planned counterstrike on Iran. It comes after a report suggesting Prime Minister Benjamin Netanyahu may spare Tehran's nuclear and energy facilities to limit potential escalation. In baseball, the Yankees take Game 1 of the ALCS. The Pinstripes beat the Guardians 5-2. The Mets even up their NLCS against the Dodgers. The Amazings beat Los Angeles in Game 2 7-3. Now, during the game, a snake slithered through the LA dugout. Something to add to Dodgers history. See what I did there?
Oh, boy.
Okay. Anyway, the rally snake was wrapped in a towel and removed by a member of the grounds crew. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
I mean, it's a big deal. Back to back tonight and tomorrow night in New York.
Yeah.
High-level baseball.
High-level baseball. It's what you want.
It can't be worse than Giants-Jets.
Oh, boy. Yeah, that's tough. I mean, the Jets...
I mean, they gave a fight to the Bills. I'll give them that.
Yeah, but they need some... They need to go on a big winning streak.
On the YouTube live chat, thank you so much. Informed discussion. They're all geared up for the Trump interview here at 12 noon. Good morning in New Brunswick, Canada.
Really?
Have you ever been there?
No.
I have never, Lisa, I've never been there.
I didn't even know there was a New Brunswick.
Oh, come on.
It's like
Hockey.
Newfoundland, right?
Like Bar Harbor. Bar Harbor is up to Maine, like way up Maine. Like Gurra's the only one I know that's ever been to Bar Harbor. Moncton, New Brunswick is 100 miles further. It's like the Bay of Fundy where they have ginormous tides. Like huge, like mega tides.
Yeah, that's out there. Yeah, it's out. Oh, yeah. It's
like,
right up against Maine. I see
it's
what you're
north of
saying.
Nova Scotia.
All right.
That's where Christmas trees come from.
Okay, I believe it.
And oysters. Good oysters.
Yeah, I'm sure they do.
Okay. Well, good morning in New Brunswick.
We'll go
the
up to
Maritimes.
St. John. We'll go up to St. John.
Good hockey. As well. Good morning, to say the least. Futures up 4 from New York City. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still treading water after the S&P 500 hit its 46th record high of the year. Right now we have NASDAQ futures up about 25 points, 20,644. The Dow futures down 135 points at 43,229. 43,228, and the S&P futures up about 5 points at 5,912. We have the 2-year yield 3.93%. That's down 2 basis points. The yield on the 10-year 4.05%, and that's down 4 basis points. To currencies, we have the dollar weaker, Japanese yen stronger, up about 0.4% at 149.16 against the dollar. Euro, British pound stronger. We have Bitcoin. It was higher yesterday. Right now down, lower this morning at about 65,000. Earnings checking back in with Bank of America shares. They are up nearly 3%. We have Goldman Sachs up nearly 3% as well, and we have Citigroup up more than 2%. Tomorrow, more bank earnings with Morgan Stanley. Shares of grocer Albertsons, they're up more than 1%. Reported adjusted earnings per share, second quarter beat estimates. Meanwhile, Kroger gets an extension of its exchange offers. And Tom, the live chat was on fire about the Patagonia. Someone called it a Patagucci. Cole on YouTube said Lululemon came out with a nice new knit vest, so maybe that will replace the Patagonia. Who knows? For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash.
One of the great things is Paul and I dress like, I rarely see you in the Patagonia. Damien lives in it. Damien's
he sports it.
Total Patagonia.
Yep.
And it's like, it's like the uniform now, right?
Finance pros, I think the kids call them.
Yeah, they're 6'5". And,
yep. Trust fund.
Trust fund.
There you go.
All that. Speaking of which, Srinath Rajan is just a jewel, paragraph by paragraph on what a company's doing. And on the Srinath Rajan watch is a small firm called Goldman Sachs Group, Inc. Profit up 45%. As you mentioned, Paul, earlier, their stock price basically number one-ish this year. And that was sort of off the Solomon gloom.
Yeah, he's cleared that. I think that's in the rearview mirror.
I think he's like executive of the year. Is what it's October. We can go there.
I mean, a higher stock price is going to take care of a lot of partners who might be upset about this or that policy. But I think put up some solid numbers across most of their businesses here. They're the trading desks from equities to fixed income to commodities all put up some good numbers, and we saw that capital markets performance from the other firms as well, B of A and Citi.
I mean, I learned from Brad Hintz at Sanford Bernstein, and Mr. Hintz would say every quarter to quarter, there's just these moving numbers, but it's sort of like an all cylinders moment. So their bonus season's got to be huge.
It's got to be. That's a great point. And here we are in October, and those conversations are being had. Have been taking place, and everybody's jockeying, to get their slice of the pie. The business unit leaders are going to, the top bosses there and say, hey, my desk did a great job this year. We got to pay these folks, and because the hedge funds are out there. So I suspect that the bonus season will be very good.
But this is the conundrum. We frankly, folks, with the quality Paul's faces in building Bloomberg Intelligence, you have some groups where the worst guy is phenomenal. There's no like rate them 1 through 5. You know, the 4s and the 5s, we move out, and you're like, well, we did that 5 years ago.
Yeah, and they try to do that every year. They try to do that every year. I think a lot of institutions do as well, and you got to be really careful here. The art of paying people on Wall Street, and it really is an art in a lot of ways, is the folks that are really driving the business. You have to take care of them because they have optionality. They can go across the street. They can do lots of other things. You got to take care of those folks.
Look out on Twitter and LinkedIn, where I put out a chart going back to August of 2007 of, I think it's 5 banks. It's a U.S. bank chart. I have other charts with the European trailers in it as well. But basically, it's Citigroup, after a 10-to-1 reverse split, basically cratering down at least 80%, 07, 08. And they just, as we mentioned today, Jane Fraser trying to put it together. I thought Gerard Cassidy was brilliant on that.
Yeah, I think, just from looking at it and having worked there in the past, I think she's got it on the right track. But as Gerard Cassidy says, they're in some businesses, think about your global currency business, your global corporate bank business that maybe some of the other more streamlined U.S. investment banks are not in. And those businesses carry, pretty high fixed cost base. So, for Citi, it's always been a question of what businesses do we really need to be in. And for example, a business they got out of, underwriting U.S. municipals. They were a leader in that business, a leading market share company, but they decided the return on their capital that they had to invest in that business wasn't there relative to other opportunities. So to see Citi walk away from underwriting U.S. Municipal debt was just stunning, but that's the kind of decision you got to make, I guess.
To me, the story is, with J.P. Morgan way out front, is a leg up in Goldman Sachs shares this year, where, that's basically, I think I can say this is the 2 banks, very different banks, together, and everyone else behind. And I just really, I wonder if on a 10 or 12 or 14-year basis, people understand how Bank of America really hasn't put it together compared to those other institutions.
Yeah, again, they've got that big corporate bank, the big retail presence there. I'm going to be interested to see Morgan Stanley, because now you could argue the pressure on Morgan Stanley, and there's self-imposed pressure that Morgan Stanley has to be right there with the Goldmans of the world, the JP Morgans, when it comes to trading and investment banking fees and all that kind of stuff. They expect to be right at the top, if not the top bank in all of those businesses. So you go to those top 3, boy, it's tough.
Yeah, I mean,
but and what we'll see next week, Tom, when we get the European banks, that'll be a whole different story.
I put out a thing. It's Vet Bill's birthday.
Oh boy,
it's great. He's not with us. He's out in L.A. He's doing a movie, and the vet, he went to Michael's. He goes to Michael's in Santa Monica. They give him a bone. They give him off the sirloin, whatever, the porterhouse, whatever. He gets the bone when he's out there. So he's shooting a movie, and he's got the sweater thing going. Kaylee Cox works over with Ritholtz Wealth Management.
Yeah, she is. She's good.
Her dog, this pug nose thing, wears a Patagonia just like Barry. I mean, people are putting their dogs in the Patagonia vest.
Yep, absolutely.
I never have done this. I missed it.
It's a great business. I mean, the pet care business, I'm shocked at what people pay for their pets.
Don't get him started. Don't get him started.
Arrivederci Rome.
Yeah.
Ready? 5 fun-filled days. 2 fun vet in kennel fee. $1,500. Are you kidding me?
Oh,
I said, what are they eating? Chopped liver?
You just take them with you.
It's great. Well, the best thing about my vet is you write the check directly out to her latest prep school.
Right. Exactly.
You don't even write it out to the vet clinic. She says, I go, well, who do I make the check out to? She says, Horace Mann.
Right, exactly.
I said, great. Okay.
But you won't take them on a plane? You won't do that?
No, we don't. No, I don't do what's it called? Like a comfort dog?
Oh, yes, at the service pets.
I call that out all the time on people. This is not a service dog. And don't sit that dog next to me. The little ones are fine, but sometimes they'll come in with really big dogs.
Yeah. Kennel Fee's not a service pet because she's got the IQ of a Kardashian. She wants to go down the business class aisle hugging everybody. But vet can't do it. It's too much.
All right.
He gets his own chair when he goes out to L.A. Again,
I think the airlines are cracking down on that, though, I think.
A little
see
bit.
less of it. I see less of it than I used to.
And less idiocy than there used to be. We say good morning to all of you, and we're thrilled with what we see on YouTube. After your commute in your living room and you're in your office, YouTube, subscribe to Bloomberg Podcasts. Out on YouTube, good morning on Bloomberg Radio. It's our new technology. Apple CarPlay, Android Auto, the Bloomberg Business app. And Lisa, help me here. With Bloomberg Business Now, I said, I don't want to promote Nathan Hager. I mean, it's just, the guy's huge. He doesn't need it. And yet this thing is ginormous. It's like, what is it, 6 minutes?
It is.
Update?
It's just under 5, and it's everything you need to know in that time. But it's Bloomberg News Now. Nathan Hager, Karen Moscow. Amy
Karen's
Morris.
involved?
Yes. They all
My
work hard
word.
for it. Punch it out.
Good stuff.
And it's out. It's really important. Bloomberg Business Now. I'm not going to mince words. NPR invented this, and we're just saying we can do this for economics, finance, the markets worldwide. Bloomberg Business Now. It's a good 6 minutes. You just have it there. When you need it, it's there.
Yep.
Fitch is up 5 at 12 noon. John Micklethwaite in conversation with the former president, Donald Trump, the Economic Club of Chicago. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the markets going to kick things off after more bank earnings? We've heard from Bank of America, Goldman Sachs, Citigroup. We also had more economic data. New York State factory activity, that's swung back into contraction territory this month, hitting a 5-month low. We are off and running, so let's get to the numbers right now. We'll start with the S&P 500. Right now up about 3 points at 5,863. The Dow down 0.2%, 70 points, 42,985. The NASDAQ up about 0.8%, 13 points, 18,516. We have the 2-year yield 3.93%. That's up down 2 basis points. The yield on the 10-year 4.05%, and that's down about 4 basis points. To commodities, we have Brent crude $74 a barrel, WTI crude $70 a barrel. Want to point out spot gold higher at $2,650 an ounce. At the open, let's check in with the big banks. Bank of America up 3%. Same for Goldman Sachs. Citi up more than 1.5%. That's your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. Okay, we need to get your attention. You're not going to buy NVIDIA. You're really not happy with SPX, this weighted, that weighted. You just don't want to do stocks. You want to do fixed income. So if you look at a 3-year 96th percentile, you look at a 5-year 97th percentile, it gets your attention.
Yeah, it's better than...
Better than good. Up off the Green Beach in Boston, Morgan Stanley bought into Eaton Vance, a venerable firm. Venerable with them, out of Durham and UNH. Andrew Cizarowski joins us now, senior fixed income, Morgan Stanley, and their strategic income fund. These numbers are on the edge of the iconic Dan Fuss at Loomis Sales. How are you getting 96th percentile? What's the Kool-Aid that you're sipping?
Well, first of all, thanks for having me here in the studio. It's great to be here. How we're getting those numbers is, quite frankly, we have a we have kind of best in class across kind of every sector we look at. We're able to kind of go anywhere in the world, not just here in the United States. So we go where the value is. And so if you look at our EM team, they're kind of first in class. If you look at our securitized team, we have kind of across the board performance at the top decile.
Right.
And same thing in corporate credit. And so we look for those areas. We don't kind of go where the market is. We don't just go to the ag because the investors are going there. We kind of look at those satellite opportunities in EM, in securitized products, in high yield CLOs.
Are you looking a la Dan Fuss for a total return vehicle? Is it credit improvement you're looking for? What is the part of Frank Fabozzi that's giving you that true bond alpha?
Yeah. So if you look at our performance over time, I mean, one of the things that's kind of helped us is don't take interest rate risk when you're not being compensated for it, like you weren't in 2020 to 22. Now here we are in 2024, where you have a 10-year around 4%, and then you add in a spread product on top of that, and you're looking at kind of mid-high fives. That's the time to take interest rate risk again. That's the time to be moving out of T-bills. And so you kind of take what the market's giving you. We've always done that, and I think that's where investors should be looking. It's not NVIDIA, but at the end of the day, a 10-year north of 4% is a great starting place for clients' portfolios.
How about?
I think that's the quote of the year.
Exactly.
I'm sorry. Pick just fell off his chair at Morgan Stanley. Bonds at Morgan Stanley. It's not NVIDIA.
Exactly. It's not in your father's NVIDIA. I look at the INGO function on the Bloomberg terminal, the Bloomberg Index browser. I got lots of green in the fixed income market this year, which is nice. High yield is the best. How do you guys think about the U.S. high yield market?
Yeah, I mean, look, high yield, if we're in a kind of benign default cycle, we think that kind of lower interest rates like we're starting to see come down across the board is going to be a great environment for corporate credit. We do think also that the economy's slowing, but there's going to be winners and losers. And that's where I think kind of active management comes in as we get later cycle. I think that's where people should be looking to kind of start positioning themselves for those winners and losers. Early on in the cycle, like over the last couple of years, it didn't matter. That credit selection didn't matter as much. But as we get later cycle, you are going to see that. And also the nice environment for companies is they can start terming out that debt again, refinancing at yields that were not where they were a year or two ago. So it's a good kind of debt service costs lower for corporations.
How about the mortgage business? I see the U.S. mortgage-backed security index, the Bloomberg index, that's up 3% this year. Interest rates are coming down. What's that do to the mortgage market?
Yeah, look, it's a great time to be a lender to homeowners. Because it's so unaffordable to buy. Why is that? Well, because mortgage rates are so high. Obviously, home prices rose substantially over the last couple of years. But if you think about the technicals in the agency mortgage-backed security market, it's a great kind of technical tailwind or headwind we have coming here, where you have not much supply coming on the market. We're entering a seasonally slow time where people don't move as much. You have banks that are actually starting to come back into the market. We saw great bank earnings across the board today.
Right.
That's going to be more mortgage-backed purchases, more kind of loan purchases for banks, and that's going to be a great positive technical for the agency MBS market as we go forward.
Okay, spreads are priced to perfection. We've heard that in 3 interviews in the last 2 days as well. Where do you not want to be in fixed income?
Yeah, spreads are priced to perfection, I would say, everywhere but in the securitized products market, where we just started talking about mortgage-backed securities. If you have spreads here on a nominal basis that are kind of 135 to 140 over, so you're looking at a 5.5% yield just in your kind of average agency mortgage.
Yeah, I should say you're popping 7% yield in this portfolio, right?
And exactly. So if you just start with the baseline in our portfolio is a AAA government agency bond that's yielding at least 5.5%, and then you kind of work from there. So we're not advocating that you go out and buy treasuries, although we do think that the kind of belly of the interest rate curve is where you want to be. We obviously have an election coming up. There's a lot of uncertainty about what happens to the long end.
I mean, Paul, what's interesting here is with their 3% fee, that means they're grossing 10%.
These guys know what they're doing.
As a joke, folks.
Yeah, that's a joke. Yeah.
Sorry, counsel at Morgan. I'm sorry, Morgan Stanley. I'm sorry.
Exactly. Andrew, September was a record month for investment-grade new issuance. Were you guys picking up the phone when all the bankers were calling you?
So if you look in our strategic income portfolio, I mentioned kind of a go where we see value. I mean, right now, we've been light on investment-grade corporates and favoring that kind of heavy agency MBS allocation. We have a bit of a barbelled approach, too, though. We are investing in high-yield bonds. We are investing in senior loans, and we are investing out in emerging markets. And so we like that barbelled approach now. If you look at the agency investment-grade corporate ratio spread differential there, it's one of the tightest it's ever been. So we're kind of hanging out in agency mortgages and waiting for that opportunity. If we do get a little kind of a backup in yields, then we look to add in that environment.
Are you comfortable with where this Federal Reserve appears to be going? They did 50 basis points to start off and kind of left the door open about how much more they want to go, how quickly they want to go. What's the messaging?
Yeah, look, I think if you're the Fed, obviously they cut 50 basis points, and at the time it seemed like that was the right move. And then we had a backup and kind of a positive payroll surprise just a couple weeks ago. I think that's gonna be at the end of the day not the norm going forward. I do think the labor market continues to slow. We think that we are later cycle, so you're going to continue to see a weakening in the labor market. We're going to have a payroll report that comes out in 2 weeks that's going to be heavily distorted by the hurricanes and also Boeing and other kind of auto manufacturer shutdown. So it's not impossible to have a negative print that comes out, and all of a sudden we're going to see the narrative shift back to the Fed's behind the curve. I think the one thing for the Fed is that we know that they're well above neutral. So this is the easy part of the cutting cycle. They can cut another 25, another 25. And they're still so far north of neutral that no one can really question that. It's just a question of pace to get back to neutral. And then do we stay at neutral? Do we go through neutral?
How do you review new issuance away from securitized? Do you just like say, no, we're not going to do it, there's always a premium, or how do you play new issuance?
No, I mean, look, when you look at the new issuance market, there's a lot of value to be had in kind of getting in early on these deals, because a lot of times, especially when we're in a bull market in bonds, you have this pop on the break where bonds issued a day later, it's trading up a point or two. So you have to be in that new issue market. If you're not in that market, you're kind of being left behind a little bit. So I would say that you have to keep an eye on it. It's something, but you can pick kind of winners and losers at the end of the day, and kind of tilt your portfolio more heavier allocation into the sectors you want to overweight there.
We haven't had a discussion on credit risk in a while. Is there credit risk out there in the marketplace?
Look, I think that for bond investors and for risk markets in general, the nice thing we have now is that the Fed put is back. And not that you want to rely on that, but we didn't have that in 21. We didn't have that in 22 and even early 23. So I think having that Fed put back in your corner is a positive tailwind for risk assets. Any sort of slowdown in the economy, especially in the labor market, is going to be met with a more aggressive Fed, which is going to be good for corporations and for credit spreads in the long run. Any sort of short-term technical.
You majored in snowboarding at Durham, at UNH as well. Have you taken White Heat at Sunday River? Have you ever been on? It's like, I looked at the top of White Heat, Paul. I said, nah, I don't think so. You go down that pub like it's nothing?
I've been on White Heat many a times. The nice thing, as we were talking before the show about Sunday River and up in Maine, is you don't get the crowds, so you don't have to worry about.
You do get the ice.
You do get the ice.
The day I was there, the ice was there.
That's New England skiing, so you get ice everywhere in New England. We'll get our one snowstorm a year where we get
You can pretend
powder,
it's a Rockies.
Yeah, exactly.
And White Heat is like Copper Mountain out in Colorado. It's like straight down.
I got my first bonus check from Wall Street in 1987. Haven't skied the East since.
Yes,
now it's it's a college tuition payment to go skiing. So you you have to buy your season pass early, or it's going to it's going to be $200, $300
every time. Yep.
No, they price themselves out of the markets we're in. This has been great. Come back. Andrew I can't pronounce. Yastrzemski?
Yastrzemski. I'll go with
Andrew Yastrzemski.
He's in Boston.
With Eaton Vance and Morgan Stanley, the data is stunning. 96th percentile off the Bloomberg professional service for a 3-year track record. With Morgan Stanley, Eaton Vance are strategic fun. Speaking of strategic, with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. With 3 weeks to go before Election Day, both Kamala Harris and Donald Trump are pitching dueling economic proposals in the final stretch of the presidential campaign. But economists surveyed by Bloomberg don't see much difference between the candidates when it comes to their impact on inflation or U.S. growth. We get more from Bloomberg's Saleha Mohsen in Washington.
It looks like both of them would see inflation to rise around 2.2%, according to the economists that Bloomberg surveyed, which is just above what the Fed is expecting, which is around 1.2 to 2%, maybe just below 2%. But I think that's a more surprising factor of that whole scenario.
Bloomberg's Saleha Mohsen in Washington. And former President Trump will face more questions about his economic plans when he sits down for an exclusive interview with Bloomberg News editor-in-chief John Micklethwait. That conversation at the Economic Club of Chicago begins at noon Wall Street time. Our coverage begins at 11:30 this morning on a special edition of Balance of Power on Bloomberg Radio and television. Another federal civil rights violation trial gets underway today in Louisville for former police officer Brett Hankinson. He shot and killed Breonna Taylor in 2020 during what was allegedly a botched raid where Taylor's boyfriend fired at police. Former federal prosecutor Lori Levinson.
This is a case of a federal civil rights violation, but it really is the question of whether an officer used too much force. And don't forget that Hankinson fired 10 shots into Taylor's apartment through a glass door that night.
Former federal prosecutor Lori Levinson. The UN Security Council expressed strong concern as Israel has fired on and wounded UN peacekeepers in southern Lebanon during intensified fighting. It reiterated its support for the role in supporting security in the region. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
A firestorm created over support dogs. The live chat on YouTube
really
lit up on this. I was ignorant of this because, Vet Bill would, bite the flight attendant. There's 3 types of dogs: service animals, therapy animals, in emotional support
that's
animals.
The one that's a little dicey.
As of August 1, they've really tightened it up, just like you said, Paul.
Yeah.
There it is.
Yeah. I mean, I think obviously some people need them, can use them, benefit from that. That's great. But I think maybe there was a time when maybe people were taking advantage of it.
Just a little bit. Yeah.
Pets that help ease their owner's anxiety or depression through companionship. That describes Vet Bill.
Yeah.
You can fly with an emotional support dog or cat as a pet, but they got to go into the cagey thingy under the seat.
Yes, under the seat. They have to be able to fit in there. Because I saw someone next to me who actually.
Yeah, but I've seen like yellow labs trying to squish themselves under the seats. I'm like, really?
Usually you have to buy a ticket for
exactly.
And
well, like Matt Miller. Matt Miller bought a ticket for his dog, which is like a huge dog, in first class, on his way to Germany when he was relocated to Germany.
In first class?
Yes.
Yeah, he paid
famous picture. Famous picture.
Famous
We'll have to see if I can find that.
Say this. Running green on the screen now. SPX up 2 here as we're open for trading. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks hovering near record all-time highs. Solid earnings from big banks that offset a slide in energy producers. So right now we have NASDAQ up about 0.1%, 35 points. Let's get to levels 18,537. The Dow down 0.6%, 268 points, 42,801. We have the S&P 500. That's up about 2 points at 5,862. We have the two-year yield 3.92%. That's down 2 basis points. The yield on the 10-year 4.05%, and that's down about 5 basis points. Checking with commodities, we have spot gold higher, $2,652 an ounce. We have Brent crude $73 a barrel, WTI crude at $69 a barrel. Checking back in with those big banks, we have Bank of America up more than 1%. Goldman Sachs right now, little change, and we have Citibank down about 1.5%. And finally, this story on the Bloomberg terminal, you have to check it out. A lot of kids turning to Starbucks pink and unicorn drinks. It's a really big report from Bloomberg Business Week that's turning the chain into this hangout spot for kids, but it's coming at a cost because they're pumped up with sugar, so a really good intake into that. That is your Bloomberg Business Flash. Tom and Paul.
So, what do you do?
Okay, I was in a Starbucks in my town a couple of weeks ago, right around schools were getting let out, around 3 o'clock, and these 4th grade boys came in with the backpacks bigger than they were, and they ordered this drink that had to be conjugated into 3 different tenses. I didn't even know what it was. And then they just easily, without even thinking about it, pay with their phone.
Yes.
Zap. And it was like $15, by the way.
That's my life.
Yes.
I get the bill all the time.
These are 4th grade.
These are 4th grade. These things are pumped up with sugar, and then the parents are getting the bills like every day. It's like $15 Starbucks, $15 Starbucks. Yeah. It's out of control. Out of control.
Lisa, it is. I will editorialize here and say, yes, it's out of control. This is by chance. I've been efforting for the last number of days with Mark Kimmitt. He is a retired brigadier general. He enjoyed the Army when it was most unpopular after Vietnam as a battery executive officer at Camp Stanley in Korea. He has distinguished academics in finance as well, is a chartered financial analyst, and we have him here by chance on a day where our John Micklethwaite will speak with Donald Trump, presidential candidate and former president. We'll ask some delicate questions of General Kimmitt. I'm not going to mince words, General Kimmitt, and this, of course, goes with our conversations with Admiral Stavridis, Ben Hodges, and others. John Kelly has come out and said some terse comments about President Trump. General Miley in the new Woodward Burke with terse comments about the president. If Donald Trump is reelected, Mark Kimmitt, how does he form a defense establishment with that kind of accolade from his former employees? How does he form as commander-in-chief his next defense administration?
Well, Tom, the fact remains is that you've got a lot of people that object to President Trump in terms of his character and what they believe to be his competence. But I'm sure that there is many who have not stood up and said, I would vote and I would work for President Trump, because in many ways, the invective alone that would be sent and directed to those people just means that it's not worth saying that now. So I suspect there are a lot of good people out there that would work for President Trump. I would remind your audience that when we were in uniform, we were told to serve whoever was the president. And I certainly hope out of the uniform that people will do the same.
General Kimmitt, you and I had a blistering conversation, I'm going to say 3 years ago, I'm guessing, on your greatest fear, which is combat within cities. We've lived that in Ukraine, no question about it. Maybe less so in Israel, but the level of combat, the nature of combat on the Lebanese border, how is that different than what we see in Ukraine?
Well, I think it's more comparable to the difference between what we see in Gaza. Gaza was city fighting, inch by inch, block by block, house by house. Lebanon is more of a maneuver war, even though it may not look that. The Israeli army is trying to take land, and it's trying to find underground subterranean missile platforms more than they are trying to actually go against terrorists. everybody knows that Hezbollah has lost its top 5 tiers of leadership. So it's not really an extremely effective fighting force anymore as a large organization. The great threat to Israel is those missiles. Israel wants to get its people back into the north, back to their houses, and they can't do that without taking the Hezbollah rockets. And for the most part, those rockets and missiles are south of the Litani. And so it's more of a maneuver sweep operation inside of Lebanon right now, where it was true city fighting inside of Gaza.
So, General, with that background, how do you believe the Israelis will retaliate against Iran? Because that's kind of, I think, the next step for a lot of observers.
Sure. It's actually pretty clear on how. The real question is when. I just got off of an Israeli station where we were having that conversation. They've taken off the target menu oil installations and nuclear facilities, probably for many, many good reasons, as well as political reasons to take some pressure off the Harris campaign. But that menu still has a whole lot of entrees on it. You can go against infrastructure, you can go against military targets, you can do inside of Iran, continue what you've been doing inside of Iran, which is targeted assassinations. The purpose in the mind of Netanyahu is not to defeat or destroy, but is to reestablish deterrence against Iran so that Iran knows that if it ever does attack Israel again, the pain that will be inflicted upon them will be so harsh as to deter them from doing that. That's what he's trying to do. He's not trying to take land. He's not trying to destroy. He's not trying to defeat. He simply wants to set up a deterrence structure that had held since '79 and had been breached in the last year.
General, while we have you on, we must ask you about your thoughts on the Ukraine. Sometimes it gets a little bit lost here in the headlines coming out of the Middle East here.
It really has.
It has. And how do you think this plays out, General, over the next 3 months, 6 months, 12 months? Is that the time frame?
Well, two things. Let me do a little self-promotion. I'm doing a videotaping tomorrow for the Wall Street Journal, as I have done a number of times, on the state of the war inside of Ukraine. 2 years ago, 2+ years ago, about 3 months into the war starting, I wrote an article for Wall Street Journal saying that this war was going to turn into a bloody stalemate, and that's exactly what's happened. There's not going to be a whole lot of maneuver on the ground. There should not be, and unlikely there will be any breakthroughs. And now we're getting into the muddy season where there will be very little maneuver as well. So I think we've got to accept the fact that Russia and in general, and Putin in particular, are making this a war of exhaustion on Ukraine. Ukraine is running out of troops. Ukraine is running out of equipment. Russia is not. So at some point in time, it would be wise for Zelensky to start looking at what his negotiations options are, since the military options seem to be coming to an end.
General Kimmitt, thank you so much for joining Bloomberg Surveillance this morning. Mark Kimmitt there, and look for his work for the Wall Street Journal with the update on Ukraine. Red and green on the screen here, nice lift to the market. Sweeney and I, look at Bitcoin. Are you kidding me? 67,000?
Wow, there you go.
I mean, you know.
Risk on, as the kids say.
Risk on, yeah.
Yep.
And the VIX 19.46 is not near like a 15 level, is it?
No, it can come back a little bit if it wants to.
We got a huge Nat King Cole response, 1958. Frank Sinatra, 1954. 3 coins in the fountain. I guess it's called Fontana di Trevi. Do you know there's a fence around the Trevi Fountain now in Rome? They have to do repairs. And the tourists are so substantial, they have like a construction fence around it.
And nobody knew about that fountain until Audrey Hepburn.
And La Dolce Vita and the rest of it. We're playing sensitive Italian songs here. I got a motel upgrade.
Did you?
Motel Auto.
Nice.
This is Bloomberg Surveillance. Maybe I'll call him from there. We'll see.
C'è tan sol spera ancora. Guarda l'acqua luccicar. espera juntar.